Good evening, my dear students. Welcome to the third session of the CA Final Indirect Tax Laws, Paper 8. I hope all of you who are attending today have heard the earlier sessions which were held this week on Monday and Wednesday. The first session dealt with the concept of GST in India and the constitutional amendments which came along with that. The second session dealt with the concept of supply, which is the taxable event in GST, and also dealt with the concept of mixed and composite supply. We also covered section 7 in detail, that is the concept of supply, along with the 3 schedules to the CGST Act 2017. We saw the importance of the concepts of course or furtherance of business. And we also saw the concept of consideration and the cases where the transactions are treated as a supply, even though there is no consideration. So I hope all of you remember what we have dealt with in the previous 2 sessions. Because what we have discussed previously will continue in today's session in the form of chapter 3, which is known as charge of GST. Please bear in mind that in GST always the provisions and chapters are interlinked to each other. You will find the sections in what we discuss. We will find the reference to the sections which we have not even dealt with till now. So therefore, there is a lot of linkage between the sections as to what we are reading and along with what we are going to read and along with what we have read in the past. So the critical point is here, my dear students, that we have to clearly understand the concept and also understand the reference to the various other sections wherever the law is providing the same. So therefore, in today's chapter, we are going to cover the concept of charge of GST. Good evening, Sriram. Good evening, Kishore. Good evening, Janki. Welcome to the session. So today what we are going to discuss is the concept of charge of GST. When I say charge of GST, when exactly is the GST charged to tax? It is on the concept of, it is on supply, definitely. And also the concept of forward charge and reverse charge are going to be taken up in this session. In layman terms, forward charge is whoever collects the GST pays it to the government. Very simple. I am providing a good service to any particular person, or I am selling a good to any particular person. So I am providing that service or selling the good, and to that extent I am getting the respective amount and I collect the GST as well. This GST I paid to the government, me as a supplier paid to the government. This is your regular forward charge mechanism. So when I speak about reverse charge mechanism, it is entirely the opposite. I provide the service, I sell the good, but I don't collect the GST. The GST is directly paid by the recipient of the service or the customer who purchases the goods from me. They directly pay to the government, they don't pay it to me. The usual circle is they paying to me and I paying to the government, but in this case they directly pay to the government. So we are going to see the various services which are subject to reverse charge mechanism. There are goods also which are a few goods also which are subject to reverse charge mechanism, but from examination point of view, services chargeable to reverse charge mechanism is important. We also have certain amendments based on those sections which we shall cover during the session. We are also going to see the concept of composition scheme, which we discussed in the previous session. Few of you understood what exactly, answered what exactly was the composition scheme. That is our section 10 of the CGST Act. We shall cover that in detail. What is the composition scheme? What is the rate of tax? And what is the limit up to which the composition scheme will be applicable? Sir, how to differentiate between composite and good evening, Tirupati. Good evening, Magdalene. How to determine, differentiate between composite and mixed supply in exam question? See, when we covered the subject, there was a table in the presentation. I've also uploaded the presentation, by the way, in the online portal. Please download that. So there is a slide there which gives you indications as to when it is a composite and when it is a mixed supply. The thumb rule here is to understand whether those goods can be sold separately and whether there is a principal supply involved. Laptop bag, composite supply. AC, installation of AC service, composite supply. We have to see whether one supply depends on the other. If one supply depends on the other and the other is the main supply, then it is a composite supply. Mixed supply means, as I told you, gift packet with chocolates, sweets, ice creams, or whatever, whichever is the highest rate of tax. One is not dependent on the other. One is an individual product on its own right. So therefore, definitely, these are some of the indicators which will enable you to understand what is the composite supply and what is a mixed supply. So therefore, GST, as we all knew, is an integration of the previous indirect taxes. Very important to understand the concept of intrastate supply and interstate supply. Intrastate supply means supplies within the state. Interstate supply is supply between two states. And if there is the location of the supplier and place of supply of goods or services are in the same state or union territory, it is treated as intrastate supply or goods or services. Now, there is a common misconception that intrastate supply means both the supplier and the receiver have to be located in different states. Please bear in mind, in GST, the actual physical location of the two parties are not important. What is important is these two concepts which are even defined in the GST law. That is the location of supplier and place of supplier. Location of supplier defined in the GST law, we will see what it is. Location of the supplier means usually where he is located. The second one is the place of supply. See, place of supply cannot be given a common sense understanding. A place of supply is a concept which is clearly given in the section, for which you have a separate chapter which is dedicated. Place of supply as given in the provisions is important for us to understand and not our common sense understanding. Please bear in mind. So therefore, now why am I stressing on this? When you are deciding whether it is an intrastate supply or interstate supply, please make a note of it, everyone. The two elements which decide whether it is an intrastate supply or whether it is an interstate supply are two aspects. One is the location of the supplier and one is the place of supply. Fine, I hope this is clear. So this is your intrastate supply when these two are happening in the one state. Interstate supply is absolutely the opposite. The location of supplier and the place of supply are either in two different states, either in two different union territories, or in one state and one union territory. Then it is an interstate supply of goods or services. That is, between two states, it becomes an interstate supply. Now, what do you mean by this term electronic commerce? Can anyone tell me? Please give me your inputs. Electronic commerce. Why is this word become very significant in the year 2023 or even say 3 to 4 years back? Earlier, electronic commerce was some Greek and Latin stuff. When the mobile phones were just introduced and the smartphones were just introduced, we never knew what exactly was electronic commerce. We knew what is electronic commerce only when an app was used to procure the goods, when an app is used to procure the transport services, when an app was used to order the food. These days, everyone knows that we eat more through the online e-commerce operator. We order more food than we cook and eat at home because it has given the facility of getting the food stuff to our doorstep. So what is electronic commerce? Can anyone tell me? What is electronic commerce? What quickly comes to your mind when the word electronic commerce is there? Commerce means supply of goods or services through online mode of business. Okay. Commerce or trading by electronic means or mode. Okay. More online and door-to-door service. All of you definitely have got the common sense understanding, correct? But now coming to the next question. Why is the electronic commerce concept important in GST? Why is the electronic commerce concept important in GST? This can anyone tell me? All I know by now, all of you, most of you know what is the term electronic commerce. Now I want to know, why do you think this electronic commerce is important in GST? Why a separate definition is dedicated to this? Is it that important a phrase? Is it that important a phrase? And a separate separate like definition of computer is not there in GST. Definition is of laptop is not there in GST. Then why is definition of electronic commerce operator there in GST? Can anyone tell me why do you think the term electronic commerce is important in GST? Section 9, subsection 5. Okay, fine, you are correct, but I want more clear. See, since you know this section, you have answered this, but someone who doesn't know the section and where it is covered in GST, there I want such persons to answer, because I want to see what exactly comes to your mind. To determine the place of supplier and the tax implications thereon, you are partly right. The main important point, the important word is the word tax implications. Tax implications. So here place of supply and location of supplier not known to the buyers. Okay. See here, the most important thing, my dear students, why this term electronic commerce is important is because when you order something through the mobile, do you know the restaurant through which you are ordering? But does the restaurant know you? Does the restaurant know you? You are just an XYZ customer. So why is this order being fructified? Why is this order being implemented? Because of the electronic commerce portal, which is connecting the buyer and the seller. So I order the food, okay, and the app person gets it. Second example, I book a cab, driver comes, I sit in the cab, I get down. Who do I make the payment to? Of course, if I make it in cash, it is to the driver. But who collects the payment? Who arranges for the payment to be collected? It is the app. It is the app. So here, what was noticed by the government when this was happening even when service tax was there. So what was happening is the government over a period of time noticed that there was a large segment of service providers which was going untaxed. Why? Because you are booking the cab, driver will come, you sit in the car and go. Service provider is driver, service receiver is you. Where is the GST being collected? Ultimately, the government is being put to the loss. That is why the concept of electronic commerce is important in GST, because in such cases where the GST does not go to the government, the responsibility can be fixed on the electronic commerce operator to discharge the GST. That is why the concept is important. Now let us go to the definition. It means the supply of goods or services or both, including digital products over digital or electronic network. Very, very simple. So either digital products or it can be physical products, but both these should happen over the digital or electronic network. 2 subsection 44. Electronic commerce operator is very simple. The person who owns, operates or manages digital or electronic facility or platform for electronic commerce. So a person who's owning, managing, operating the platform is your electronic commerce operator as per 2 subsection 45. I hope every one of you understood what is the definition. Now we come to the next definition, aggregate turnover. Why this aggregate turnover definition is important? Because in this particular session, why it is important? Because we are going to cover composition scheme, which says that persons up to a threshold of 1.5 crores can be eligible to opt for the composition scheme. So there the concept of aggregate turnover is there. So what exactly is aggregate turnover is? It means the aggregate value of all the taxable supplies, okay, excluding the value of inward supplies on which tax is payable by a person on the reverse charge basis. Now, let me just explain you till here and then we continue with the definition. First of all, aggregate value of all taxable supplies is clear. Whatever supplies you have made on which you have collected the GST, everything will be covered in your aggregate turnover. There is no controversy. It is very clear at the moment. Here it says, excludes the value of inward supplies. excludes the value of inward supplies on which tax is paid by a person on the reverse charge basis. Let me take you to the discussion of reverse charge. Example, slight deviation, but try to follow. Once we go to the reverse charge mechanism services, this will be more clear. I am a business person. My turnover is 50 lakhs. Apart from that, I procure legal service. Okay, there is a legal case which my company had to fight. So I procured the lawyer services and I paid him say 1 lakh. Lawyer services or legal services are covered under the reverse charge mechanism and I cannot collect GST from them. I have to pay the money to them and I have to pay to the department directly on reverse charge mechanism. I am the service recipient. I will pay the amount directly to the government on reverse charge mechanism. This amount of 1 lakh what I am paying to the lawyer should not be excluded in the aggregate turnover. That is what this phrase means, excluding the value of inward supplies on which tax is payable by a person on reverse charge basis. So I hope that is clear. So aggregate value of taxable supplies, exempt supplies, export of goods or services. Exempt supplies is supplies which are not chargeable to tax. Export of goods or services are zero rated supply, which we will cover in the next sessions, concept of zero rated supply. Export of goods or services and interstate supplies of the persons having the same PAN number to be computed on an all India basis, but excludes the CGST, SGST, UTGST, IGST. So therefore, in simple terms, aggregate turnover of all taxable supplies, excluding the inward supplies on which RCM or reverse charge mechanism is applicable, exempt supplies are included, export or zero rated supply included, and also interstate supplies of persons. That is, if you have more than one GST registration in one state, when you are calculating the aggregate turnover, you have to take the turnover of each particular state and add them also to get the value of the aggregate turnover. So I hope this 2 subsection 6 is clear. Customs frontiers of India, you will see the definition in more clarity when we discuss the customs. Customs class is going on. As of now, just remember, it is the limits of the customs area. Area of a customs station or warehouse, any area where imported goods are ordinarily kept or export goods are ordinarily kept before clearance. That is 2 subsection 11 of the Customs Act. So you will see the definition in customs also. 2 subsection 98 defines the term reverse charge mechanism. As I told you, liability to pay the tax by the recipient rather than the service supplier of the goods or services. The liability to pay the tax by the recipient of the supply of goods or services instead of the supplier under 934 or 534. We will see what these sections are, is a reverse charge as per 2 subsection 98 of the CGST Act. 2 subsection 10 IGST Act. See, this definition is under the IGST Act. So wherever the definition is under IGST Act, I will highlight that point for here so that you don't get confused. 2 subsection 10 of the IGST Act. What is import of goods? Bringing goods into India from a place outside India. Very simple. From place outside India, you are bringing the goods into India. So that is an import of goods. And then 2 subsection 56 defines the term India. This is also there in customs. Territory of India, territorial waters, seabed, subsoil, continental shelf, exclusive economic zone, any other maritime zone as referred to in the Territorial Waters Act 1976. Even the year 2011 or rather 2010, most of them usually definitions won't be asked in CA exams. So let us leave this definition. So no one read the word India definition, but it actually came, explain the term India as per Central Excise or whatever. This actually was put as a question. No one expected. So please try to just remember these. Worst case, if someone asks you the definition, you have to know. Also, airspace above the territory and territorial waters are also covered in the definition. Before we go to this, let me see if there is any queries. Aggregate turnover is the aggregate amount of all kinds of turnover. Yes, exempted, non-rated, non-GST and taxable supplies. Correct. Non-taxable online recipient. Again, this definition also was the product of the digitization of the world as such. The world has become so easily accessible. Now, services can be provided by one person to a person outside the country, and without even seeing his face, the service can be provided. So, this non-taxable online recipient, why was it important? Because there was a different type of services which was being provided which is called your OIDAR services, online information database access or retrieval services, wherein I procure this service online. I procure the service online and pay for it. So when we discuss the OIDAR services, this will be covered in the place of supply chapter. This word non-taxable online recipient is used. So what is that non-taxable online recipient? Government, local authority or individual, any other person not registered and receiving online information and database access, OIDR services, in relation to any purpose other than commerce, industry or any business or profession located in the taxable territory. Very simple. Who is procuring the services in relation to purpose other than commerce, industry located in the taxable territory. Government authority, clarification was given, any body set up by the Act of Parliament or state legislature with 90% or more participation or control. Fine. This was non-taxable online recipient 216 again of the IGST Act. So now we come to section 7. Here we go to IGST Act to discuss the provisions of the concept of intrastate supply and interstate supply. And then we will come back to the CGST Act to discuss the provisions of the composition scheme. Subject to the provisions of section 10, supply of goods where the location of supplier and place of supply are in two different states, two different union territories or one state and union territory, it shall be treated as supply of goods in the course of interstate trade or commerce. Very, very simple. Two different statements, interstate trade or commerce. Then 7 subsection 2 also puts clarity on import of goods. What is to be done in case of import of goods? So supply of goods imported into the territory of India till they cross the customs frontiers shall be again treated as a supply of goods in the course of interstate trade of commerce. So after it crosses the customs frontiers and later it is sold to someone, it becomes an intrastate supply. So if you see 7 subsection 1 refers to supply of goods, 7 subsection 3 refers to supply of services. So subject to the provisions of section 12, when we see section 12 will be covered in place of supply. Section 12, apart from the general rule, also enlists certain specific places of supply, which is clearly declared under the law. So what has to be done in that particular situation? That is given in your section 12. So section 12, subject to the provisions of section 12, the supply of services where the location of the supplier and the place of supply are in two different states, two different union territories or state and union territory shall be treated as a supply of services in the course of interstate trade or commerce. I hope now this is clear, right? So why this subject to provisions of section 12 is section 12, wherever you read in the place of supply, you will clearly know that in separate cases, the place of supply is given. So those provisions, whatever is specifically given in the section, we have to take. But apart from that, the general rule, location of supplier and place of supply, different states or union territories or one state and union territory means it is to be treated as the supply of services in the course of interstate trade or commerce. 7 subsection 4 again tackles importation of services. If you import any services, it is to be treated as a supply of service in the course of interstate trade or commerce. Then supply of goods or services or both where the supplier is located in India and place of supply is outside India, to or by a special economic zone developer or SEZ unit, or in the taxable territory, not being an intrastate supply and not covered elsewhere. So this is a residuary section. Sometimes supplier is in India and place is outside India, export of services, that also interstate trade or commerce. If you are providing to special economic zone, what is special economic zone? We will discuss shortly. It is basically a geographical area. Though it is physically situated in India, for all taxation purposes, it is known as a foreign country. So that also is interstate trade or commerce. Or supply in the taxable territory, which is not an intrastate supply and not covered anywhere else in the section. So any supply which you don't have clarity and you know for sure that it is not an intrastate supply, you straight away take it as an interstate supply, shall be treated as a supply of goods or services or both in the course of interstate trade or commerce. So before we summarize and go through the section, Aggregate turnover is used as threshold limit for both regular and composition dealers. Yes, Mancha, you're right. Correct. Fine. Now we go to the analysis of what we have discussed in 7, 1, 2, 3, 4, and 5. Supplies within India. As I told you, these two terms are very, very important. Where is the location of supplier of the goods and where is the place of supply? Location of supplier of goods is not mentioned. I mean, is not defined as such. It is to be based on the facts and circumstances of the act. Place of supply cannot be given a common sense understanding because clearly section 10 to 13 of the GST Act covers the place of supply. Place of supply chapter, don't please miss. Very, very important chapter. Don't miss it at any cost. Then, supplies outside India. Whenever you are importing the goods into the territory, till they cross the customs frontier, shall be considered as supply of goods in the course of interstate trade or commerce. Then import of goods, meaning goods into India, getting the goods into India from a place outside India. Fine. So getting the goods into India from a place outside India. Supply of services in the course of interstate trade or commerce, where the location of supplier and the place of supply supplier in two different states, interstate supply. Though the term location of supplier of services is not defined, 2 subsection 71 of the CGST Act 2017 defines the term location of supplier of services. What does it mean? Where the supply is made from a place of business for which the registration was obtained, the location of such place of business. So in the GST certificate, whatever address you have, that you can take. Or if the supply is made from a place other than the place of business, if that is a fixed establishment elsewhere, the location of such fixed establishment is to be taken. Where a supply is made from more than one establishment, whether the place of business or fixed establishment, the most directly concerned with the provisions of supply. The location directly concerned with the provisions of supply has to be taken into account. So supply made from place of business, such place of business location. Supply made other than fixed place of business, such other fixed establishment to be taken. More than one place you are making the supply, whichever is directly concerned, you have to analyze and check and take that as a location of supplier of service. Again, if there is no such places as above under the above 3 clauses, you straight away take as the location of the residence of the supplier. Then import of services. It's very difficult to track an import of services. Import of goods is very clear because you import the goods, it will come to the customs. So therefore, the customs will allow the goods to be got into India only when the respective tax is paid. So the supply of services which are imported into the territory of India shall be treated as supply of services in the course of interstate trade or commerce. Import of services defined under 2 subsection 11 of the IGST Act as supply of any service where the supplier is outside India, recipient is located in India, and place of supply of service is in India. So therefore, this is when it is an import of service. Supplier should be located outside India, recipient should be located in India, place of supply also should be located there in India. If these conditions are satisfied, then it is an import of service. Good evening, Namrata. You are late to the class. Please attend the 25 minutes what we have done, because that introduction is very critical for further understanding. Of course, if this is like a revision class for you, then no problem. But it is your first class, please listen to what we have discussed in the past. Or if you are there since 6 o'clock and telling good evening now, that also is fine with me. Then, so that is one. Now we look at the 7 subsection 5. Supply of goods or services where supplier is in India, place of supply is in outside India. This is basically your export of service. It is important to note, in case location of recipient is not material to qualify as supply in the course of interstate trade or commerce. However, such supply also need to satisfy more conditions to qualify as an export of service. Fine. So therefore, in this particular situation, location of recipient is not important. When you see zero rated supply, when you see the exports in the place of supply chapter, you will understand when it shall be considered as export. But simple understanding, simple conclusion here is export means it is you are to be treated as an interstate trade or commerce. Now we look at the transactions with a special economic zone developer or special economic zone unit. Can anyone tell me, if I ask you what is a special economic zone, you will immediately see the slide and reply. Let me tell you a question. Why is a special economic zone created by the government? Why is a special economic zone created by the government in each state? Please try to answer this. Please try to answer this one. Why is a special economic zone created? Wait, looking. Sir, in case of supply of goods or services, place of supply is the place of location of the supplier or the recipient. See, this question will get cleared more in the place of supply chapter. So I don't want to answer this question very elaborately, but in most of the cases, it is the place of supply, location of the recipient. Most of the cases, place of supply is the location of the recipient, but it is not a thumb rule. Section 10 to section 13 covers it in great detail. So please remember, because if I try to answer this question, it will become very long. So in the place of supply chapter, you see, to promote exports, to provide tax benefit, promote setting up decentralized wealth, very good. Said created by government to provide support to economical backward areas, to enhance FDI, to promote additional businesses, exports, imports. Okay, very good. I hope most of no one has Googled these answers, because one disadvantages of the online classes, I never know if you Google and telling it. But if you're telling it by yourselves, very good. You pretty much know what an SEZ is. This is primarily a special economic zone. Is a zone which is created by the Indian government to allow the foreign companies to set up their establishments and work here itself, taking advantages of the economies of scale. Let us take an example here. Wells Fargo is an American bank. Wells Fargo has created an office here in India. That doesn't mean Wells Fargo is going to service Indian customers. So therefore, when Wells Fargo is creating here, that means what? For the back-end operations, the Wells Fargo Bank in US has created an establishment in India, special economic zone. Why it has created? Because it can take advantages of the economies of scale. You hire people here, the salaries are lesser. The people are more hardworking. Because of the peer pressure, everyone starts working a lot. So therefore, the work is done more easily, and expenses, rent, etc. is very less, and employment opportunities are generated. The Americans, etc., come here to review the situation. Due to this, the tourism industry flourishes, the hospitality industry flourishes. So these are some of the main objectives behind opening a special economic zone. So therefore, if the even though the special economic zone is situated in the country, it is technically a foreign company only, because it is a foreign company which is setting shop here. So therefore, any transaction with the special economic zone developer also, a developer of special economic zone, as well as the special economic zone unit, with them, if there are any transactions, in this particular case, it is also to be considered as an interstate trade or commerce. Fine. So therefore, tax purposes, it is a place outside India. Any supplies made to SEZ or developer or vice versa are interstate supplies. It is noteworthy that place of supply is not relevant in case of the supplies to or from SEZ unit or developer. Place of supply is not at all relevant. It is very, very clear. Even though it is in the same state or India, it is an interstate trade or commerce. Then the residuary section 7 subsection 5. If anywhere the supply of goods or services are there in the taxable territory, not being an intrastate supply and not covered in elsewhere in the section. Fine. In that particular situation, that also it is an interstate supply. It is a residuary clause, shall cover all supplies other than those covered under any provisions determining the intra or the interstate supplies. Fine. So that was your section 7 which speaks about interstate supply. Now we come to section 8, which talks about intrastate supply, that is supply within the rest state. So here what happens? Subject to the provisions of section 10, again place of supply rules. Subject to the provisions of section 10, the supply of goods where the location of supplier and the place of supply are in the same state or same union territory, it shall be treated as an intrastate supply. Fine. So subject to provisions of section 10, the supply of goods where the location of the supplier and the place of goods are in the same state or union territory shall be treated as intrastate supply. Okay. Again, there is a provision which says that the following shall not be treated as intrastate supply. Following supply of goods shall not be treated as intrastate supply. What was that? Number one, supply of goods to or by an SEZ developer or an SEZ unit. This will definitely not be an intrastate supply because SEZ means interstate trade or commerce, very clear as per section 7. Goods imported into territory of India till they cross the customs frontiers of India. So importing goods till they cross the customs frontiers, this also will not be treated as intrastate supply. Next one, supply is made to a tourist referred to in section 15. Very, very interesting point. Tourist means a person who is coming from outside the country, stays there, maximum period should be 6 months. Maximum period, if it is 6 months, if he is purchasing any product or service from here, product rather, not service, if he is purchasing product here, because supply of goods is clearly given as per the provision. If he procures anything here, it will not be intrastate supply, it is an interstate supply. IGST should be collected. How many of the businessmen actually know this? Any foreigner will come if you are selling something to him, GST, SGST only they will charge. They don't know that this section 8 subsection 1 provision exists. So therefore, this has to be followed. IGST has to be chargeable to a tourist. So 8 subsection 2, subject to the provisions of section 12, again place of supply provisions. Supply of services where the location of the supplier and place of supplier in the same state or same union territory, they shall be treated as an intrastate supply. Again, same thing, provision shall not include the SEZ. Tourist is not there for services if you observe, it is there only for goods. Then distinct person explanation is given, very similar to what is there under section 15 explanation. Same thing what we discussed in previous class. Establishment is there in India and outside India. In one state, establishment is there, another state, another establishment is there, or one state in establishment is there. Within that state, different business vertical. That is, you have two businesses, but in one state. So you have obtained for 2 GST registrations. These two shall be regarded as a distinct persons. Even though a branch or agency or office is there, it shall also be treated as if he is having an establishment in that territory. That clarification also is given. So that was your section 8 where provisions. Yeah, one doubt here. Sir, it means that if the branch of the foreign company is located in India, the transactions between head office and branch is treated as interstate transactions. Branch is in India, head office is in India. Exporter imported, GST applies 100%. 100%. No doubt about it. Fine. Export means it will be zero rated. Import means tax will come. Fine. Sriram, I hope you got that clarification. Okay, just a summary here. 8.1 and 2. Supply of goods or services both are covered. Location of supplier, place of supply in the same state, intrastate supply. Exclusions is SEZ developer or SEZ unit. Supply of goods made to the tourist shall not be considered as intrastate supply. Explanation to section 15 defines the tourist as a person not normally resident in India who enters India for a stay of not more than 6 months for legitimate non-immigrant purposes. So therefore, what is this explanation to section 15? This is important. Please make a note of it. A person not normally resident in India who comes for a stay of not more than 6 months for legitimate non-immigrant purposes. The main purpose of his stay should be only for tourism or recreation. It should not be for immigrant legitimate if you not do a job or anything like that. Then goods imported to India also interstate supply. Distinct person we have already discussed in the previous session. I hope it is clear now. Then very interesting situation here. Now there is a particular service of accommodation, conferencing, banqueting, etc. Now I will have to go to the place of supply section 13 provisions here. Only then I'll be able to understand, explain you the situation. Very simple. What does it say? In case of a supply of service by a hotel provides the accommodation service. So hotel is providing the service to the person or company or whoever. Okay. It is providing it to a SEZ unit or any other. Let's first look at this, then we come to this example. It's providing to any person. I am a hotel which is situated in Hyderabad, and you are coming from Delhi to stay in this hotel and attend some conference. I charge you 5,000 rupees per night. I give you an invoice, 5,000 plus CGST, SGST, 9%, 9%. So therefore, then this guy objects, the guy who stayed at the hotel. He said that if you charge CGST and SGST, my GST registration is in Delhi and I will not get the input tax credit. Please charge IGST. But that is not possible. The reason is section 13 very, very clearly says, in case of accommodation services, the place of supply is the place where the immovable property is located. So here hotel is located in Hyderabad. Location of supplier of service is also located in Hyderabad. Place of supply is in Hyderabad, which is nothing but the place where the immovable property is situated. So therefore CGST and SGST will come. This is the law which is given in section 13. Now what happens if a similar service is provided to SEZ? SEZ is in India only, though it is a foreign, it is in India. So whether I should take it as interstate supply or an intrastate supply. Here the government has clarified that this is the section which is there, section 12, subsection 3, clause C. Place of supply by way of accommodation shall be the location at which the immovable property is located. But here, if you see 7 subsection 5b is a specific provision relating to supply of services. So therefore, the specific service, if there is a conflict between the two provisions, interpretation of statutes, corporate and allied laws. I don't know if you have this chapter. We had this interpretation of statutes related topic at that point of time. So if there is a conflict between two provisions, the specific provision shall always prevail over the general provision. So where is the specific provision here? 7 subsection 5 clause B is the specific provision which says that SEZ means straight away interstate supply. Whereas 12 subsection 3 clause C is the general provision which says that place of supply is where the place where the immovable property is located. So here 7 subsection 5 clause B will prevail because it is a more specific provision. It is a more specific provisions. If a foreign national comes to a place in India, he receives any supply of goods or services, and if both location of supplier as well as recipient, in what case IGST, but not services, goods, because that explanation gives only goods, it doesn't come in services. Please don't forget that. Foreign national is coming, he is procuring goods. Both foreign national and the supplier of goods are in the same state. Still it is IGST. Why? Because he is a tourist. But for services, it will continue to remain CGST and SGST because in the tourist explanation, it is relates only to supply of goods and not for supply of services. I hope Sriram, you understood this particular point. Now we come to the next provision, section 9 of the IGST, supplies in territorial waters. Territorial waters, what is to be taken? Notwithstanding anything contained in the Act, where the location of supplier is in the territorial waters, the location of such supply, that means you are going in a ship. In the ship, something is being sold on the ship. Where is the location of supplier? He is on the ship itself. He is serving. And the place of supply is in the territorial waters. In one ship, one luxury restaurant was set up. In there, he is supplying the food and beverages. Alcoholic beverages or not, please don't ask. Alcoholic out of GST, by now you should know this. Food and beverages he is supplying. So supplier is located in the ship. Recipient is nothing but place of supply here, located in the ship. Where is the place of supply? where is the place of supply. Suddenly tell where is the place of supply. At that time, you don't need to tell because you are on the ship. But once you come and you file the GST returns, you will have to find out whether CGST should be there or IGST should be there. Or at least the person supplying should know what he has to charge. So what has to be taken here? You have to find the nearest to coastal state or union territory where the nearest point of appropriate baseline is located. So therefore, if the supplier is in territorial waters, he is on the ship. His location you have to take, which is nothing but refer the definition, place of establishment or whatever. Let me take an example. A supplier is in Maharashtra. He is selling on the ship. Consumer is consumed the food and beverages. It is located to the nearest appropriate baseline of Visakhapatnam. What will be charged? IGST will be charged because he is in Maharashtra. That is deemed to be Visakhapatnam. So IGST will be charged. I hope it got the point. So therefore, it determines the location of supplier or place of supply, where it is in territorial waters. Territorial waters means what? It is a belt of coastal waters extending up to 12 nautical miles from the baseline of the coastal state. Not defined in GST. You will find it in customs. Where location of the supplier is in the territorial waters, it shall be deemed that the location of such supplier is in the coastal state or union territory where the nearest point of baseline is located. Fine. Now we come to section 9. We come back to the CGST Act and section 5 of the IGST Act, which is your 9 subsection 1, which speaks about your chargeability section. Chargeability section. Subject to the provisions of 9 subsection 2. This 9 section is very, very important. Please make a note of it. In this 9, you will have provisions regarding to reverse charge, provisions regarding to electronic commerce operator, and chargeability section, which is clearly mentioned. Okay, so this is very, very important. Is it similar to high sea sales in earlier CST Act? Tirupati, I have purposefully tried to forget CST and VAT, and with great difficulty last year I forgot it, because in the professional practice, as much as you want to remember the VAT, service tax and CST, it is all the more confusing for you to interpret GST. That is why I was purposefully I have forgotten what is there. So similar to high sea sales in earlier CST Act, I think it is similar, but I don't want to get into what is CST Act because it's no longer there. It is now 6 years that since it is disappeared. I don't want to again remember the CST and VAT, etc. Fine. So therefore, subject to provisions of subsection 2, there shall be levied a tax called the Central Goods and Service Tax on intrastate supplies of goods or services. Why intra only is mentioned here? Because inter is covered in IGST Act section 5. Okay, on intrastate supplies or both, except on the supply of alcoholic liquor for human consumption on the value determined under section 15, which is nothing but the value of supply related provisions, and such rates not exceeding 20% as will be notified by the government on the recommendations of the council and collected in such manner as may be prescribed and shall be paid by the taxable person. Fine. What are the important points you have to remember here? Central Goods and Service Tax will be levied on all intrastate service except for the supply of alcoholic liquor for human consumption on value determined under section 15 and such rates not exceeding 20%. 20% is only CGST here. So please don't get confused. Sir, in some cases they ask 28% GST. Why? Because we are reading only CGST section. Each state has their own SGST law. So in that again the 20% will come. Therefore, maximum rate of GST should not cross 40%. 20% CGST, 20% SGST, like that. 9 subsection 2 speaks about the tax which shall be levied with effect from a later date on the 5 petroleum products, that is petroleum crude, high-speed diesel, motor spirit, natural gas and aviation turbine fuel shall be levied with effect from such date as may be notified by the government on the recommendations of the council. 9 subsection 3, again important provision. This section refers to a notification. In that notification, there are multiple instances of reverse charge mechanism, and we have to see those notification and understand from the services point of view. So 9 subsection 3 speaks about the respective reverse charge mechanism. The government may on the recommendations of the council by notification specify the categories of supply of goods or services are both, the tax on which shall be paid on the reverse charge basis by the recipient of such goods or services or both. All the provisions shall apply to the recipient as if he is the person liable to pay the tax in relation to the supply of such goods or services. That means what? What are the supply of goods or services? In those cases, supplier should not collect the GST. In those cases, the recipient will pay the GST directly to the government. Fine. And all the provisions of GST will apply to the recipient as if it is applied to the services. As if it is recipient, as if it is applied to the supplier. So that was your 9 subsection 3. 9 subsection 4, when it first came, was a very, very controversial section, but those section has now been deleted. Let us not try to remember what that section is. It is not worth. Okay, it was a very, very controversial and very, very tricky section. If you want to know the history, I can tell, but it doesn't make sense, because what was there before in 2017 was something very, very harsh. Slowly they removed it, and now it is a different section altogether. So what is there now? 9 subsection 5(4), it says that government may specify on recommendations a class of registered persons who shall, in respect of supply of specified category of goods or services or both, received from a unregistered person, pay it on the reverse charge basis. Okay, so here what does it mean? With respect to certain specified goods or services, if I am a registered person, I am procuring it from an unregistered person, only specified categories of goods or services. If that unregistered person is not registered under GST, whatever I am purchasing from him, on that I have to pay GST under the reverse charge mechanism. This is the law. What was it before? It was a slight change itself, but the change made post impact. Earlier, it was if you are a registered person and from whomever you purchase and whatever you purchase, more than 5,000 means you have to pay the GST on the reverse charge basis. Let me take an example here. If you see here, 9 subsection 4. 9 subsection 4 earlier. Here, Mr. A is registered under GST. Okay. He purchases stationery products from Mr. B, who is not registered under GST. Okay. For rupees, purchase amount is rupees 1 lakh. Now here, what was the old law? As per the old law, Mr. A needed to discharge GST under reverse charge mechanism. This was the 9 subsection 4 earlier. Now 9 subsection 4 now. What is it now? Okay, this is removed. If you see here, it doesn't matter what product he's buying. It should only be more than 5,000. If he's purchasing, he straight away has to discharge the GST on the reverse charge mechanism. Let me see if I can cover the notification here itself on this one, so that we can. This is the notified services. So this is what 9 subsection 4 is now. That means the same rule will be there, but only on notified services. What are the notified services? It means that ITC shall not be, about tax rate shall be available. 1 second. Yeah, this is basically for real estate sector. If in case of real estate sector, first of all, what are the rates? 1% without ITC for affordable houses. That is, GST has to be paid at 1% without ITC. Other than affordable houses, it is 5%. Okay. 5% in case of all other than residential houses and commercial apartments also. There is a carpet area rule which you have to see, then it is 5%. Now, what does the rule say? This is the most important point here. In case of the real estate sector, 80% of inputs and input services, other than services by way of grant development, salami development charges or FSI, used in supplying the service shall be purchased from registered persons. That means what? 80% of inputs or input services. That is, you are a developer. You are a developer. You are doing the construction. Once you're doing the construction, there are multiple expenses. You pay the long-term lease amount, or for development rights transfer, you pay some development charges, you pay some. That is point number one. Okay. Those are not covered. Other inputs and input services. What all? Cement, steel, okay, labor contractor. What all you are paying? Okay. The rule is the 80% of the inputs should be from registered persons. If value of inputs is less than 80%, then the promoter has to pay the GST on reverse charge basis at the rate of 18% to the extent of the shortfall. To the extent of the shortfall. Let me take an example so that you understand better. Now we go back to our discussion. If I tell an example, it will be better. Here, now what example will take? Mr. A has constructed a building, okay, of 4 flats and sold to customer for rupees, say 2 crores. He sold it for 2 crores. Fine. Mr. A. So here it is a building residential other than affordable. So GST will be 5%. ITC is anyways not good. Then here what has happened? Mr. A has spent towards cement and steel of rupees, say 50 lakhs. Okay. Out of this, rupees 25 lakhs are purchased from registered dealers. Okay. Now let us assume here cement is the only expense. I'm not taking the others, but it's just for you to explain the concept. Now he has purchased for cement and steel for 50 lakhs. Out of this, it is purchased for registered. So what is the total expenses? 50 lakhs. From 50 lakhs, at least 50% has to be procured from registered dealers. So 80%, sorry, at least 80% has to be procured from registered dealers. So 50 lakhs may say 40 lakhs you have to purchase from registered dealers only. In this 40 lakhs, you have to, in this 40 lakhs, you only purchase 25 lakhs. So what is the shortfall? Shortfall is 15 lakhs on which GST to be paid on RCM 80%. Fine. I hope you got the clarity of what 9 subsection 4 was before and now what it is now. I hope most of you got this. Sir, please explain about territorial waters once again and also the taxability of supply received on territorial waters. Very simple. Territorial waters means the waters which are extended up to 12 nautical miles. Okay. That means it is forms part of India only, but it is outside the land base up to 12 nautical miles. That is 12 territorial waters. If the supply is happening on the territorial waters, how to determine the location of the supplier and the place of supply? What you have to see is the nearest baseline. The baseline nearest to the territorial water has to be considered as the place of supply. Okay. The nearest place of supply will be this place of supply. Now this supply can be goods or it can be services. If it is goods, what is the location of supplier? Go to the definition. Definition says location of the supplier is the establishment from where the supplier operates. Fine. So in that case, location of supplier will be that. What is place of supply? The estate closest to the coastal waters. This is in case of supply of goods. Supply of services, what happens? There is no definition. So in this case, we have to go as per the provision only. What does the provision say? Appropriate baseline. What is the appropriate baseline? Whatever is the state, the same has to be taken as the location of supplier of service and the place of supply. I hope this is clear. Now we come to 9 subsection 5, another very, very important section, very, very important from the understanding point of view. This only covers your e-commerce operator, as one of our students rightly answered. 9 subsection 5 when we were discussing regarding the e-commerce. So 9 subsection 5, what does it say? Government may, on recommendations of the council, specify the categories of services, the tax on intrastate supplies of which shall be paid by the electronic commerce operator. If such services are supplied to it, all the provisions shall apply as if he is the supplier liable for paying the tax in relation to the supplier of service. First point, please bear in mind, everyone please make a note of it. Section 9 subsection 5 refers only to supply of services. That is number 1. Here goods are not covered. Okay, we mention only services. What is services are mentioned? It clearly says that certain categories of services are mentioned. Where the services are supplied to the e-commerce operator, it will be as if he is the supplier here and as if he only has liable to pay the tax. Provided where he does not have physical presence, any person representing for that purpose shall be liable to pay the tax. He does not have physical presence, he does not have representative. In that case, he shall operate a particular person for purpose of paying the tax, and such person shall be liable to pay the tax. Fine. Summarizing section 9, as I told you, CGST shall be levied on all intrastate supply of goods or services. Tax shall be collected as prescribed. Intrastate supply of alcoholic liquor for human consumption outside purview of GST. Rates notified are 0.125, 1.5, 2.56, 9, 14. Please double all of this. It's only CGST. Maximum rate of CGST can be 20%. Import of goods or services, as I told you, interstate supplies, IGST should be levied. Now, 9 subsection 3, as I told you, CGST, IGST shall be paid by the recipient on reverse charge basis wherever goods or service is notified, and then also specified categories by unregistered person to the registered. What we just saw, 9 subsection 4 read with the notification shall apply to the recipient as if he is the person liable to pay the tax. Now we come to reverse charge mechanism discussion. Here we will discuss the notified goods or services by virtue of 9 subsection 3. We will also discuss the notified goods and services by virtue of 9 subsection 4. We have already seen 9 subsection 5 also we will see. So 9 subsection 3, goods are not very important from examination point of view, but just for your understanding, please remember these goods are the on which the reverse charge mechanism is applicable. Non-shelled or non-peeled cashew nuts, reedy wrapper leaves, tobacco leaves, raw cotton, supply of lottery when it is supplied by the state government, union territory to the distributor or agent, silk yarn when supplied by the manufacturer of silk yarn to any other person, used vehicles, seized and confiscated goods, old and used goods, and all these things, it is the reverse charge mechanism which is applicable. Waste and scrap when it is supplied by the state government to any registered person are taxable under the reverse charge mechanism. Now, these are now the services notified under section 9 subsection 3, which we shall go through, and based on some amendments are also happened. Let us look at those amendments too. So this is your services notified under 9 subsection 3, which we shall go through. So 9 subsection 4, second example you have told is not clear. Please explain once again. No problem. Let us go there. Till it is clear, I will not leave. See, I hope you are talking about this example. Fine. I hope you are talking about this example, Sriram. I hope this is clear. This was what it was earlier. Now this provision is not there. Don't get confused. I'll just strike it. Okay. This provision is no longer there. Okay. This is just for your understanding what I've said. Here what has happened. If you are into construction, first point, only then this 9 subsection 4 will come into the play. Constructing the houses. So here he has constructed building of 4 houses, sold to the customer of 2 crores. GST is 5% without ITC. That is the rate which is there. Okay. Here what the GST law 9 subsection 4 says, on specified goods or services, if the taxpayer procures from an unregistered dealer less than 80% of the total expenses, on the shortfall between 80% and the value what he has procured, the supplier has to pay the GST on reverse charge mechanism. Okay. So here 2 crores, that is clear. GST is 5%. Cement and steel I have purchased for 50 lakhs. Let us assume for this example only, these are only the specified services on which it is covered. For this example only, I'm taking 50 lakhs he has spent for cement and steel. Out of this 50 lakhs, that means what? 2 crores he has got sale from the customer, but he has spent only 50 lakhs amount. Out of this 50 lakhs, 25 lakhs are purchased from registered dealers. What does the rule say? Total expenses, from the total expenses, at least 80% you have to purchase from registered dealers. That is from dealers who have the GST registration. So here what you are doing, you will pay 25 lakhs you purchased from registered dealer, but actually you have to supposed to purchase 80% of 50 lakhs, which is 40 lakhs. 40 lakhs you have to purchase from registered dealer, but you have purchased only 25 lakhs. What is the shortfall? 15 lakhs is the shortfall. On this 15 lakhs, GST has to be paid on reverse charge mechanism. I hope it is clear. If still not clear, let me know. We'll crack this. If recipient is registered, then how he will pay under unregistered? That is why he is paying under the reverse charge. Recipient will not pay here on the reverse charge. I am the supplier of service. Okay, I am the supplier of service. Let us go back to that example. I am the supplier of service. Technically, he has to pay under forward charge. I am procuring the service. I am purchasing the cement from the unregistered person. If that person was registered, he would have charged the GST from me. But he is unregistered. I am the service recipient. Why am I the service recipient? I am procuring the cement and steel. So I am the service recipient. Got it? And he is an unregistered person. Therefore, I pay under the reverse charge mechanism. So here I am the recipient. Don't get confused anywhere. I am the recipient. I am very much registered in GST. Therefore, I pay under the reverse charge mechanism. Is it clear? Namrata Sriram. I hope it is clear. Now, where were we? Supplies notified under, services notified under 9 subsection 3. So category of service here, supply of services by goods transport agency in respect of transportation of goods by road. So here the supplier is a goods transport agency. What is a goods transport agency? A person engaged totally in the transport of goods and who gives a consignment note. That is, he takes responsibility if anything happens to the goods which is being transported by him. Goods transport agency who has paid CGST at the rate of 6%. Now this who has paid at the rate of 6% was there before. Now it has been removed. So what is this not paid GST at 6%? See, goods transport agency, they have 2 options. One, they can go for a forward charge mechanism, wherein they charge the GST from the customers at the rate of 12%, or they will not go for the forward charge mechanism, but the person who procures the services from the GTA will pay the GST. Sorry, if the goods transport agency goes for the forward charge mechanism, it will collect the CGST 6%, SGST 6%. If the goods transport agency does not go for the reverse charge mechanism, the recipient of service will pay the GST at the rate of 5%. So 12. So therefore 12% versus 5%. 12% will come if goods transport agency has opted for the forward charge mechanism. 5% will come when the goods transport agency has applied for the reverse charge mechanism. So here the recipient, who all are the recipient of service? Factory registered under Factories Act, societies under Societies Registration Act, cooperative society, person registered under CGST or IGST Act, body corporate, partnership firm, casual taxable person located in the taxable territory. These are all the various recipients of services to whom the goods transport agency provides the service, and then the reverse charge mechanism will trigger. As I told you, the GTS services will be taxable at two rates here: 5% where the GTA has not taken the input tax credit, 12% where he opts to pay the GST at the set rate. So goods transport agency is the service which is covered under the tax. What is the logic of purchasing 80% from the registered dealer? Brilliant question. Brilliant question. Let me answer this question also. The main important thing here of the real estate sector is whatever money is charged from the customers are not shown properly by the businessman. That is why what the government has done is to track what are the expenses. This provision has been put, as in, if any expenses are there which are procured from the registered persons, it is tracked by the government automatically, because you claim that as an input tax credit, that person will show it as a sale in his return. And I don't claim any input tax credit, the real estate builder doesn't claim any input tax credit. So the main logic of purchasing 80% from an unregistered dealer is to deter and track the respective bills which have to be procured from the respective person. Whichever are procured from the registered dealers, the government can track the respective expenses and can match it with the income which is being declared by the builder. That is why this condition of 18% for procuring from the registered dealer is being given. So GTA services, as I told you, 5% without input tax credit, 12% means reverse charge will not come, only 5% it will come. Fine. Some reverse charge mechanism exceptions are there. Services provided by a goods transport agency by way of transport of goods in goods carriage by road to department or establishment of central government, state or local authority or government agencies, which has taken registration under CGST only for the purpose of deducting tax under 51 and not for making a taxable supply of goods or services. This particular phrase, there is a particular chapter, that is the TDS and TCS in GST, there it will be covered. I think the chapter is accounts and payment of tax or payment of tax, there it will be covered. But for you to have an understanding in brief, so goods transport agencies providing to central government department establishment any service, providing to local authority any service, government agencies which have taken registered only for the GST. So this government agency technically need not pay the GST at any cost. It need not pay any cost because they are exempt. But there is a provision in section 51 which says that if any government agency is paying a contractor more than rupees 2,50,000, more than rupees 2,50,000 is government agency is providing a contractor, then it has to do TDS at the rate of 1% under this section 51. So that is an important point which you have to remember, right? And also government agencies is there for not making a not for the purpose of deducting. So this is not covered. So I hope this is clear. Exceptions where the reverse charge mechanism will not apply. Now, then further nothing contained in this entry shall apply where the supplier has taken registration under CGST and exercised the option to pay the tax on services of GTA in relation under forward charge, and supplier has issued invoice to the recipient charging GST at the applicable rates and made the prescribed declaration on the invoice issued by him. Very similar to what we discussed now. Goods transport agency is there. If he decided to pay under the forward charge at the rate of 12%, if he issues the invoice at the rate of 12%, in that particular situation gives an invoice to that effect, then and gives a declaration to that effect, this reverse charge mechanism will not apply here. Yes, if CGST Act applies, means it can it be assumed that SGST or UTGST of respective also applies and vice versa. Yes, definitely. CGST applicable means SGST also applicable. No two ways about it. Then services provided by individual advocate, including senior or firm of advocates by way of legal services, directly or indirectly. So here what is happening? Who is the supplier? Supplier is an individual advocate or a firm of advocates. Recipient of services, the business entity located in a taxable territory. Okay. Supplier is individual advocate or firm. Recipient of services, business entity located in the taxable territory. In this particular situation, reverse charge will be applicable. Then services supplied by arbitral tribunal to business entity. Who is the supplier of service? Arbitral tribunal. What is an arbitral tribunal? It is something like a court which settles the disputes at a lower level before it goes to the high courts or the supreme courts. So this supplier of service is arbitral tribunal, and recipient of the service here is a business entity located in the taxable territory. Fine. Then next one, services provided by way of sponsorship to any body corporate or partnership firm. So any services are being provided by way of the body sponsorship to any body corporate or partnership firm. Sponsorship services means what? I provide the services of sponsorship. That means I am a person who gives branding to your company. Let me take an example here. Now, Adidas is a shoe company which wants to tie up with Celebrity Cricket League to showcase its brand. So Celebrity Cricket League is a company which avails the sponsorship of Adidas. So here what is happening? Adidas is giving the sponsorship amount for which I am giving the visibility. So here the person, I am providing the visibility to them. So I am the person who is providing the services to them for which I have got the amount. So in this particular case, I am the supplier of recipient should be body corporate or partnership firm. That is very clear. Please bear in mind. So here Adidas is the body corporate, is a recipient of service. They shall pay straight away 18% on the respective sponsorship fee amount. I hope this is clear. Then services supplied by the central government, state government, union territory or local authority to a business entity. Okay. If any services is being supplied by the central government, state government, union territory or local to a business entity, excluding renting of immovable property, services by Department of Posts, transport of goods or passengers to any entity it is being provided, it has to be paid under the reverse charge mechanism by the recipient of service. Some exclusions are there: renting services, transport of goods or passengers. Then 5A, services supplied by the central government, state government, union territory, local authority by way of renting of immovable property to a person registered under the CGST Act 2017. So supplier of services here is central government, state government, UT, etc. Recipient of services, any person registered under the CGST Act 2017. Fine. So services by way of renting of immovable property separately given in 5A. 5B is what? The services services supplied by the person by way of transfer of development rights or FSI, including additional FSI for construction of project by a promoter. Okay, what is this transfer of development rights? It is in case you want your property to be developed. You approach a builder, you give him the respective property to be developed, he does the development and give it to you. So what you do is you transfer the development rights to him, or floor space index. So supplier can be anyone. Recipient of service is the promoter. That is nothing but the developer. In that case also reverse charge will apply on this recipient of service. That is the builder or the developer has to pay the tax on the reverse charge mechanism. This is a recent amendment 5AA, newly inserted in the notification. Services by way of renting of residential dwelling to a registered person. That means if you are a residential dwelling, it is exempt. Exempt supply is covered. But if you are renting a residential dwelling to a registered person under GST, So therefore, some people what they are registered under GST and they take some house on rent and run their business. Many chartered accountants also they take some in residential complexes and run their offices. So that you have to pay under the reverse charge mechanism. Fine. So that also you have to take into consideration. Long-term lease of land, 30 years or more, by any person against consideration in the form of upfront amount called as premium, salami, cost, price, development charges, any other name, and periodic rent for construction of project by a promoter. So here what is happening? Who is the supplier of service? It can be any person. I am giving a long-term lease of land. That is more than 30 years. I am giving a lease of land against the consideration. It can be upfront, it can be called anything. So for this purpose, I am giving this long-term lease service. The recipient is the developer or whoever takes it on lease. He has to pay it on the reverse charge mechanism. Fine. I hope it is clear, all these points. Arbitral tribunal I have already clarified. It is a junior level court which takes care of the disputes between two people. It can be directors or family members. Arbitral tribunal does the settlement between two. The judge hears the both and arrives at a conclusion. Whether we need to remember the list of RCM services, not at all, don't worry. Only thing is, you should know what is there in the RCM list of services. Now, suddenly, if advocate services comes in the exam, then you should recollect advocate is RCM. You don't remember the entire list like one order or something, but you have to be able to identify which is an RCM service if it is asked in the examination. That is important. Question will not tell RCM. Question will not tell RCM. Question will only mention the type of service. Looking at that, the bulb inside should switch on and immediately remember. Then next one, services supplied by director of company or body corporate to the company or body corporate. Supplier of service is director of a company or body corporate. Recipient of service is company or body corporate located in the taxable territory. So I am a director. I provide the service to the company. Okay, but not as an employee. That is not covered. Employer-employee, if you see in Schedule 3, it is totally exempt. So therefore, here I am providing a service as a director of the company to the company. I am supplier of service. I am the director is the supplier of service. Recipient is the company or body corporate located in the taxable territory. Reverse charge mechanism. Then insurance agent provides the services to the insurance corporation. Lot of insurance agents are there. They provide the services to major insurance corporations like LIC, HDFC, etc. So whatever commission is earned by that particular person, reverse charge mechanism, the insurance company pays the respective service. Same way, services supplied by recovery agent. Banking company appoints one person to recover the loans. He provides the services, reverse charge mechanism. Then supply of services by music composer, photographer, artist, or any like for that matter, relating to original dramatic, musical, or artistic works to a music company, producer, or the like. So a supplier of service here is the music composer, photographer, etc. He is providing the service to music company, producer, or the like located in the taxable territory. In that particular situation, it comes under the reverse charge basis. Fine. I hope this also is clear. (9)(a) talks about the supply of service by an author by way of transfer or permitting the use of enjoyment of a copyright covered under 13(1)(a) of the Copyright Act relating to the original literary works to the publisher. So author is there. Author provides the service to the publisher so that he can use it for the purpose of enjoyment of the copyright here. In that particular situation, recipient of service is the publisher who pays under the reverse charge mechanism. Author can, however, opt to pay under forward charge by filing a declaration in a prescribed form. Option cannot be withdrawn within 1 year of filing the declaration. So you can, author here can opt to file under the forward charge also, but you cannot withdraw the option within 1 year of filing the declaration. Then supply of services by members of overseeing committee to Reserve Bank of India. Supplier of services, member of overseeing committee. He is the supplier of service. Recipient is RBI. DSAs, direct selling agents other than body corporate, partnership or LLP. Lot of individuals have an agreement with the bank that they will get a loan for them or some bank account for them or something to that extent. So these also subject to reverse charge mechanism. Bank has to pay the tax. Business facilitator to banking company, pretty much the same. If he is able to get more and more bank accounts for the company, then reverse charge will apply. Then services by agent of a business correspondent to business correspondent. Basically a reporter who sends a person to find out some news and he provides the same, subject to reverse charge mechanism. Security services by way of security personnel. If you are providing the services to a registered person, supplier is any person other than body corporate, recipient is a registered person. However, nothing content shall apply to a department or establishment of the central government or state government, etc. Fine. So these are security services basically, or manpower security for taking care of your premises, etc. Then services provided by way of renting of motor vehicle designed to carry the passengers, where cost of fuel is included in the consideration charge from the recipient provided to body corporate. Supplier is any person other than body corporate, does not issue invoice charging GST, CGST at the rate of 6%. Okay. So if I am providing a motor vehicle on rent, in that I'm including the cost of fuel also, along with, and you are designed to carry their passengers. The supplier of service can be anyone other than body corp and does not issue invoice at 6%. Similar to goods transport agency also only, but here it is called renting of motor vehicle. Recipient is body corporate located in the taxable territory. The next one, services of lending of securities under Securities Lending Scheme 1997. Supplier of service is the lender who deposits the securities in his name with an approved intermediary for the purpose of lending. Borrower is a person who borrows the securities. We also discussed this concept in the previous session, where it was a supply or not. Then some other for IGST purposes, that import also is covered. Service is supplied by any person who is in non-taxable territory to any person other than non-taxable online recipient. Whichever person is located in non-taxable territory, he is the supplier. Recipient is the person located in taxable territory other than non-taxable online recipient. Non-taxable online recipient won't be covered here. It is covered in OIDR services, wherein that foreign person should obtain the registration in India and pay the GST. But in this particular situation, if any other service is imported, then it will be chargeable to tax under the reverse charge mechanism. Then services by way of transportation of goods by vessel from a place outside India up to customs clearance. Supplier will be a person located in non-taxable territory. He is providing the transportation services from place outside India up to customs station. Recipient of service is the importer. So on this, importer will pay the GST on reverse charge mechanism. As I told you, renting of motor vehicle, what is here basically where the cost of fuel is included in the consideration charge. Two rates, very similar to goods transport agency. 5% means reverse charge will come, 12% means it is forward charge. Just to summarize the entire thing, person liable to pay the tax under renting of movable prop, where the GST is 5%. First, you have to see whether the supplier is a body corporate or not. If supplier is other than body corporate, then you have to see whether the recipient is a body corporate. If recipient is body corporate, it will be reverse charge mechanism. If supplier is other than body corporate and recipient is other than body corporate, then straight away it goes to forward charge mechanism. Straight away it will be paid under forward charge. Again, the rate of tax will be 5%. Then if supplier is body corporate, if he opts for the forward charge, he has to pay under 5%. So I hope you understood this point of 5% versus 12%. Further changes, services provided by independent directors or those directors by whatever name called who are not employees. As I told you, director's remuneration, if it is employer-employee relationship, then no GST will come. If he provides the services, on that the GST will come. Then services provided by director both as employee, as a consultant or professional, we have to see what is the section under which the TDS is deducted. If the TDS is deducted under 192B, it is a salary, no GST. Under 184J, professional services, GST under reverse charge mechanism will come. Now, before we look at 9 subsection 5, which talks about the specified e-commerce operators, let me see if I have any queries. We take a short break and then we come back. Yeah. In section 5AA, yes, if the landlord is unregistered and the tenant is registered, tenant is liable to pay the tax under RCM. Yes, It is a new amendment. It was not there before. It is a new amendment, important from examination point of view. Security services provided to residential building registered under CGST Act attract RCM. See, yes, security services, whether he provides for residential building or whether he provides for commercial building, you should not take into consideration. But in residential building means you have to check whether that person is registered under GST. See, if the residential building, if he's providing, residential building need not go for the GST here. So the registered person concept here is important. So if you go back to the entry of security services, let us just go back here. Provided to registered person. This is very clearly given. So if a registered person, residential building, he will not be registered. If he is registered, then it will come. But 99% the registered residential building will not be registered. Yes, one more query was there. If an unregistered person rents property on commercial, but the tenant is unregistered person rents the property on commercial, but the tenant is registered, then also RCM. I didn't understand your query. If you say unregistered person rents the property on commercial means what? I didn't get that point. But the tenant is registered. See, very simple. Tenant is registered, landlord is not registered. And it is a residential dwelling. Very, very careful. Please bear in mind. Residential dwelling. The owner is not registered, tenant is registered, then only RCM will come. Commercial property, it will not come. Commercial property, landlord is registered, tenant is not registered, landlord will collect on forward charge mechanism. I hope it is clear. Fine. Let's take a short break of 10 minutes and we come back to discuss 9 subsection 5 along with the notifications and the further concepts in this chapter. Hi, welcome back, everyone. Good evening, Viraj. I hope you didn't join now. If you joined, you have lots to catch up. And one more doubt by Janvi. Sir, suppose Mr. A is a registered person having the place of business in Delhi and took another residential property in Delhi, okay, which is not used for business purpose. Or then also RCM will be applicable. No, I very clearly, as I told you, if it is good question. Mr. A is a registered person and having place of business in Delhi and took another residential property in Delhi. Yeah, so his registration is in Delhi, no? So his registration is in Delhi. So the moment his registration is in Delhi, he becomes a registered person. Once he becomes the registered person, he takes the residential property in Delhi, which is not used for business purpose. Okay, let us go to it. I have not examined this situation, but a very nice question. Let me check. Let us check what exactly the words mentioned here in 5A, then we'll get some clarity. Services by way of renting of residential dwelling to a registered person. That's as simple as that. There is no conditions attached. So you're in your doubt, as far as my opinion goes, if he takes it on the say, if he's a registered person and he takes if the rental agreement is between that registered person and the landlord, very much RCM will apply. As simple as that. Because the rule is very, very clear. There is no conditions attached or anything. It straight away says that it is chargeable to tax. So now we come to the next component of 9 subsection 5, which speaks about the electronic commerce operator. Now, if you see electronic commerce operator, as I told you, is a person who owns, manages, or operates the electronic platform. So what are the types of services which are given in this particular notification? If you observe, 9 subsection 5 covers only services. It doesn't cover goods. So what are the services what are given? If you observe here, this omnibus and other motor vehicle is a recent amendment which has been added. Earlier only radio taxi, motor cab, maxi cab and motorcycle were covered. Omnibus and motor vehicle were added recently now. So therefore that has to be added here. So that also will attract this 9 subsection 3. Omnibus means any truck sort of thing or van sort of thing where this e-commerce is provided, that is there, and other motor vehicle are also covered. Basically nothing but your Uber cabs or Ola cabs, etc. Next one, services by way of providing accommodation in hotels, inns, guest houses, clubs, campsites, or other commercial places meant for residential lodging purpose, except where the person supplying such service is liable for registration under 22 subsection 1 of the CGST Act. So therefore, in this situation, what happens? If a person provides the accommodation in the hotels, inns, etc. Okay. Make My Trip is the example here. Person who provides the accommodation in hotels, inns, guest house, etc. This particular person, he provides through the electronic commerce operator. Then here what happens is, if he is liable for registration, that is if that hotel is aggregate threshold crosses more than 20 lakhs, then is automatically liable for registration under 22 subsection 1. So that section you have to refer here, 22 subsection 1. More than 20 lakhs, if he is exceeding the threshold, then he has to collect the GST under the forward charge mechanism. That is very clear. But such hotels, if it's provided through the electronic commerce operator, in this particular situation, it will also come under reverse charge, wherein Make My Trip has to collect the GST in this example. Then the third situation is housekeeping services. This is nothing but your urban clap. In urban clap, plumbing services, carpenting services, AC repair services are all there. In this particular situation also, urban clap will be liable to collect the GST unless and until the person providing the services is liable for registration under 22 subsection 1. Fine. I hope this point is also clear. Now, this is a recent amendment which has been added. Before we discuss that, let me see if there are any queries. Fine. I think they're clear. With effect from 1/1/2002, the supply of restaurant service other than the services supplied by the restaurant, eating joints located at specified premises has been notified under the category of services, the tax on which payable by e-commerce operator if such services is supplied through e-commerce operator. Let me give you a brief understanding of this section. Earlier, what the situation was is, you had to, if any hotel or restaurant was tied up with Swiggy, or Zomato for that matter, through e-commerce operator, the responsibility was on the hotel only to collect the GST. So what used to be the model at that point? A restaurant is there, Swiggy is there, and I am ordering. Okay, let us say I am ordering from XYZ restaurant, which is listed on Swiggy. So I place an order from XYZ restaurant. The Swiggy sends the food to my house. I consume the food. That is the transaction. So here what happens? Though my payment goes to Swiggy, what Swiggy does is it retains, assume 20% of the total as its commission. It retains the commission and it transfers the balance to the restaurant. And this balance includes the GST also. So therefore, the restaurant was obliged to pay the GST. So restaurant used to pay the GST on this. This was the situation till 31st December 2021. Now what has happened is the responsibility of discharging the GST has gone to the electronic commerce operator. So now the electronic commerce operator has to pay the GST on this particular situation. So here if you see, other than services supplied by restaurant eating joints is located at specified premises. What is this? Specified premises means hotel accommodation having any unit of accommodation more than 7,500. That means what? For 5-star hotels, this does not apply. For 5-star hotels or hotels where more than 7,500 per day is the charge, that will not apply. If you are ordering through from a 5-star hotel, which is registered in Swiggy, then the liability of collecting the GST continues to be on the 5-star hotel and not the Swiggy. I hope it is clear. So from 1st January 2022, the e-commerce operator has the total responsibility of discharging the respective GST. Total responsibility comes to that with effect from 1st January 2022. Very, very important. We can expect a problem based on these lines. Fine. Let us look at some examples. Dr. Reddy Labs Private Limited agrees to sponsor a sport event organized by Hyderabad Golf Association in Hyderabad. The company has paid an amount of 50 lakhs for such sponsorship of the sports event. Consequently, the said event was named after the brand name of Dr. Reddy. Examine who is the person liable to pay the tax in this given case. Any answers? So here if you see, it is a sponsorship services which is provided to a body corporate. The moment a sponsorship service is provided to a body corporate, it is coming under the reverse charge mechanism. The moment it comes under the reverse charge mechanism, here the person who is liable to pay is the service recipient. Here the service provider is Hyderabad Golf Association, which provides the sponsorship service to Dr. Reddy, whereas the recipient is Dr. Reddy Labs, which is receiving the service of the sponsorship. So therefore, the tax has to be paid on the reverse charge mechanism. I hope that is clear. Next question. Mr. Anil Kapoor is the director in Sonam International Private Limited. Company paid him the sitting fee amount of 25,000 for January. Further salary was paid amounting to rupees 1.5 lakh for the month of January, on which TDS was deducted. Harshvardhan and Associates, in which Anil Kapoor is a partner, supplied certain professional services to Sonam International Private Limited for the amount of rupees 2 lakhs. Discuss the person liable to pay the tax in each of these supplies given in the above case. Please try to answer this question. What are the supplies which are involved here? First supply is sitting fee. Second supply is salary paid. And third supply is professional services provided by Harshvardhan and Associates. Amount of 2 lakhs. Who is the person liable to pay the tax? Supplies here. Please try to answer this question. So here if you see, he is a director, company paid him the sitting fees. So sitting fees 25,000 is not in the nature of a remuneration. So therefore in this case, on the sitting fees, Sonam International Private Limited has to discharge the GST on reverse charge basis. Salary of 1 lakh, 1.5 lakh per month, where TDS is deducted as per the applicable provisions, which is under 192B. In this particular situation also, there is no question of GST involved because it is exempt supply by virtue of Schedule 3. Then Harshvardhan and Associate professional services provided to Sonam International. It is not reverse charge mechanism. It comes under the forward charge mechanism here, and therefore he will discharge the GST on forward charge. Then next question, Suvidha Technologies is in the business of development of e-commerce platforms for various customers. Chennai Creations obtained the ownership rights of an e-commerce platform developed by Suvidha Technologies by paying a specified amount against the ownership rights. Chennai Creations also entered into an annual maintenance contract with Suvidha Technologies for technical maintenance of the said portal. The Chennai Creations supplies its own goods and services through the said portal to the ultimate customers. Examine who is the e-commerce operator in the given case as per the provisions of the GST law. So what happens here? Suvidha Technology is the development of e-commerce platforms. That is what he is doing. Then Chennai Creations obtained the ownership rights of the platform developed by Suvidha Technologies by paying the amount. Chennai also, AMC also is there. So Chennai Creation supplies its own goods and services. So though the portal here is developed by Suvidha Technologies, the amount and for the ownership rights is paid by Chennai Creations, and it also supplies the goods through that. So this, since it is the owner, manager and operator is Chennai Creations here, so therefore the e-commerce operator is our Chennai Creations. So rates of GST, if you see the various rates of GST which is covered here, 6 rates of GST is there, 0.125%. It is there for rough diamonds. Again, this is only the CGST component. SGST component is different, so 0.125 plus 0.125. 0.25 is the rate of rough diamonds, and then 1.5% is for jewelry. 2.5%, 1.5% means 3% for jewelry, 2.5% paneer means 5%, 6% food, juices, mobiles, computers is actually 12%. Fine. Then 9%, that is your regular 18%. Most of the goods are under 18%. Hair oil, toothpaste, soap, etc. 14% is small cars, consumer durables, services also. These are the different types of rates which are there. In case of 5-star hotel, air-conditioned restaurant, 14% is the rate of GST. Again, classification of goods, as I told you in the earlier session, also in the first session, that it is purely based on the HSN, that is your harmonized system of nomenclature. The tariff items are referred in the respective schedules which are there here. So in this, it is an internationally accepted coding system based on the classification is done. For services, it is called as service accounting codes. It is a modified version of the United Nations Central Product Classification. We have already seen this when we discussed 9 subsection 4. 9 subsection 4 speaks about the specified services which are notified, which a registered person procures from an unregistered person. He has to pay on the reverse charge basis. So this is mainly for new projects by promoters. Real estate sector, new projects by promoters. Basically, affordable houses, 1% without ITC is there, and for non-affordable houses, it is 2%. Non-affordable houses, it is 5% without ITC. All houses other than the affordable houses, and also the commercial apartments such as shops, office, etc. in a residential real estate project in which carpet area is not more than 15%. There it is 5% without ITC. So therefore here about tax rate shall be applicable, ITC shall not be available. This is the condition which is important. 80%, as I told you, should be purchased from registered dealers. If value less than 80%, then on this promoter, on the shortfall, 18% needs to be paid on reverse charge basis. I think this we have, this also we have cleared on to the extent of the shortfall, the GST has to be paid. Now, further clarifications now. Passenger service fee and user development fee are two important things which are there, which has to be considered. Passenger service fee, user development fee are charged by the airport operators from the passengers. Now, these are levied on the passenger when he books the ticket. So the moment he books the ticket, he has to pay this amount, and this is charged by the airport operator, but it is collected by the aircraft operator. So therefore, here it is a pure agent. The airline acts as a pure agent of the passenger. So separately, it has to be indicated. So on this, further GST will not come because this is collected by the airport operator. Fine. So that clarification is given with regard to these. So I hope these concepts are clear. Now we move on to section 10, which talks about the composition levy. What does this particular section say? Why did this particular section come? As we discussed in the previous session, this particular section mainly was introduced to help certain businesses in the respective compliance, because your regular GST registration entails a lot of compliances. Monthly GST returns have to be filed, monthly GST payments have to be filed, GSTR 1 return has to be filed, 3B versus 2A reconciliation has to be done. It is entirely a different animal in itself. That is why in this particular situation, for the regular small scale entrepreneurs, this facility was given, which said that you don't want to follow the complicated method, you go for the regular method, and you make sure that you pay the taxes on the composition method, that is at a lesser rate than what it is there, but however certain restrictions are there. So therefore, what does the section say? Notwithstanding anything contained to the contrary, okay, but subject to the provisions of 9.3 and 9.4. 9.3 and 9.4 means the reverse charge mechanism will continue to apply. That provisions will continue to be there. Okay, subject to the provisions of 9.3, 9.4. A registered person whose aggregate turnover in the preceding financial year did not exceed 50 lakh rupees may opt to pay in lieu. That is, instead of the respective tax, he can pay the tax amount calculated at such rate as may be prescribed, but not exceeding 1% of the turnover in the state, or in the case of manufacturer, 2.5% in case of person engaged in making supplies referred to in 6B of Schedule 2. That is basically your supply of food and beverages or any other article for human consumption, and 0.5% of the turnover in case of other suppliers. So what does this mean? It means that any registered person whose aggregate turnover in preceding financial year did not exceed 50 lakh rupees. Now this 50 lakhs, the government has the power to increase this 50 lakhs to 1.5 crores by way of a notification, which the government has already gone ahead and done it. So therefore, presently the limit for the composition scheme, it basically is 1.5 crores. Though it is 50 lakhs as per the section, the government has gone ahead and made it 1.5 crores. So therefore, in this particular situation, in case of manufacturer, it is 2%, 1%, because we are looking at the CGST law, 1% here, 1% as per SGST, 2% manufacturer, 5% if it is restaurant or catering service provider, if it is making supplies as per this paragraph 6B, and 0.5% of the turnover in other case, other suppliers, which is 1%. Therefore, for traders, it is 1%. This proviso has been exercised by the government. This proviso said that by notification, it can increase the said limit of 50 lakhs to such higher amount not exceeding 1 crore 50 lakhs. So therefore, this 50 lakhs has been increased to 1.5 crores. The proviso has been exercised. Now there is another proviso which has come. What does this proviso say? Now there may be a situation wherein a person who is fundamentally engaged in supply of goods may also engage in supply of services. That is, if a person who is engaged in supply of, say, air conditioners, he may provide the installation service. Okay. Or similarly, a person who is engaged in trading and supply of watches, he may provide the watch repair service. So for these provisions, therefore there is a small service component which is there, and this person is opted for the composition scheme, just for the small service component, debarring him from the entire composition scheme was felt a bit unfair. So therefore this provision was brought in, which said that if a person is opting to pay the tax under any of the clauses, he can also supply the services other than those referred in clause 6B of schedule. That means he can supply services, but other than the restaurant and food services, because that is already covered in the composition scheme, not exceeding 10% of the turnover in the state or union territory in the preceding financial year, or 5 lakh rupees, whichever is higher. So what does this mean? It means that apart from the sale of goods, he can also provide the services. Apart from sale of goods, he can also provide the services, but there is a limit for that. That limit is not exceeding. You should see the previous year financial year turnover. Previous financial year turnover, 10% of that or 5 lakhs, whichever is higher, is the limit which you have to take for the purpose of providing the services apart from the goods. We shall see some examples on that, then you'll get clarity. Then, for the purpose of second provision, value of exempt supply of services by way of interest on deposits, advances, loans, etc., discount, etc., shall not be taken into account for determining the value of the turnovers. Fine. So, if you are calculating the aggregate turnover, you will not calculate you will not take into account the interest and discount given on loans or advances. Then we go to 10 subsection 2, which speaks about the conditions. Okay, what are the conditions to be satisfied? The registered person shall be eligible to opt under subsection 1 if, as otherwise provided in subsection 1, he is not engaged in supply of services. So apart from whatever is given in subsection 1, that is the 10% limit, he should not be engaged in supply of services. Secondly, he is not engaged in making any supply of goods or services which are not leviable to tax under the Act. So that means he should not make the supply of goods or services which are exempt, okay, or not leviable to tax. He is not engaged in making any interstate outward supplies of goods. Very, very important point. He should not sell the goods outside the state. That means the person who is engaged in supply of goods can opt for the composition scheme only in case he has intrastate supply of goods. Next one. He is not engaged in making any supply of goods or services to electronic commerce operator who is required to collect the tax at source under 52. Now, this required to collect the tax at source under 52 is now not applicable to restaurants. But again, important point is, if he wants to tie up with the goods and services, if he tie up with the electronic commerce operator for supply of goods and services, he cannot go for the composition scheme. So therefore, it doesn't make sense. Your composition scheme, you say that you want to help the small scale businessmen, but here what you are doing, small scale businessmen these days tie up with Amazon, Flipkart, etc. for the sale of the respective goods. So if you say that he ties up with electronic commerce operator, you are not applicable for the composition scheme, the purpose itself is defeated. But unfortunately, that is the law. And then he is not a manufacturer as may be notified by the government on the recommendation of the council. Council has recommended certain products. If he is a manufacturer of those products, he cannot go for the composition scheme. Next, he is neither a casual taxable person nor a non-resident taxable person. What is a casual taxable person? Sometimes you have regular GST registration in one state, but you want to go for a business exhibition in another state. So mainly you are based out of Hyderabad, but you have to now go, you want to participate in a business exhibition in Bangalore for 2 days. So there you are gone there for the purpose of selling. So then the GST law says that you have to obtain the registration as a casual taxable person. That is your casual taxable person. Similarly, non-resident taxable person is if any non-resident sells some products, it has to take a temporary GST registration. A lot of these flea markets are there in Goa and other tourist states wherein foreigners come and sell various products. So there you have to go and you can put that and put your stalls, and then you can get the GST registration as a non-resident taxable person. Provided where more than one registered persons having same PAN number, registered persons shall not be eligible to opt for the scheme unless all registered persons opt to pay the tax under that subsection. That is, now, if more than one registered person, that means you have multiple GST registrations. You cannot say, for in this GST registration, in this state I will go for composition scheme, in the other state I will go for the regular scheme. You can go for the composition scheme in all the states where you have exercised the options. You cannot say, I will go for regular scheme here, I will not go for regular scheme there. That you cannot say. That restriction also is given. So that is your 10 subsection 2. These are, we are just going through the sections, and then we will analyze the sections and work out some case studies also based on this. Now, 10 subsection 2A is basically related to composition scheme for supply of services. So initially when composition scheme was first introduced in GST, it was only for supply of goods. gradually the government felt that even the service providers needed to have a scheme like this so that they can exercise that particular option. So that is why this 10 subsection 2A was introduced, which said that for services, this option is there. But restaurant service you should not take, because restaurant service is already covered in 10 subsection 1. So this covers all services apart from the respective restaurant service. What does the section say? Notwithstanding anything contained subject to the provisions of 9(3), person not eligible to opt to tax under subsection 1. This line is very, very critical. You are not eligible to opt to pay the tax under 194 under subsection 1 and subsection 2. Aggregate turnover in the preceding financial year does not exceed 50 lakhs. Another important point. For service provider, the aggregate turnover in the preceding financial year should not exceed 50 lakhs. May opt to pay in lieu of the tax payable by him. Okay, instead of the tax under 9 subsection 1, that is your regular tax, he can pay the tax not exceeding 3% of the turnover. 3% of the turnover CGST means total net rate is 6%. So in short, what are the rates of composition levy? For manufacturer, it is 1%. For trader, it is 2%. I'm sorry, for manufacturer, let me just check once. There is small confusion on that. For manufacturer, it is 2%. For trader, it is 1%. For restaurant service, it is 5%. And now for services, it is 6%. These are the various rates of composition levy. You will have to remember some for this, because 3 things are only there. We have to remember it. There is no other option. Fine. Then 10 subsection 3, what does it say? If you are opted for the composition scheme, the moment your aggregate turnover exceeds the limit, whatever has been prescribed, then the option shall lapse. That is, you cannot further opt to pay under the composition scheme. Okay, so when it shall opt, the date has been given. So the option availed under subsection 1 or 2A, that is your regular 1.5 crores or 50 lakhs, shall lapse with effect from the day on which the aggregate turnover during the financial year exceeds the limit. So you're opted for the composition scheme during the financial year. You're opted for composition scheme on 10 subsection 1. You crossed 1.5 crores. The moment you crossed 1.5 crores, the option shall lapse. So the taxable persons to whom these provisions of 1 or 2A shall not collect any tax. This is a very other important point. This 1%, 2%, 5% and 6%, you have to pay from your side. You cannot collect it from your respective customer. You cannot collect it from your respective customer, nor can you claim the input tax credit. These two you have to very clearly remember. You cannot collect the tax from your recipient, nor you can claim the input tax credit. That is very, very important point. Then sometimes the officer may have reason to believe that this person has opted to under the composition scheme, though he is not eligible. His turnover has increased, but still he has opted for the composition scheme. So in addition to the tax which is required to be paid, that is a regular tax, he may also be liable to penalty under 73 or 74 sections. These sections will cover in penalties and prosecutions chapter. So therefore, these penalties will also have to be covered in case the officer has a doubt on this one. Now, there are 2 explanations which are given for the purpose of calculating the aggregate turnover. For purpose of calculating aggregate turnover, you have to include the value of the supplies from 1st of April up to the date when it becomes liable for consideration, but shall not include that interest, discounts, etc. For turnover of state or turnover in union territory, you shall not include, for determining the tax payable, you shall not include the value of the supplies from the 1st of the financial year up to the date when it becomes liable to registration under the Act. Okay, so therefore, for determining the tax, you should not include from 1st April till he becomes liable for registration. That will be under composition levy only. So those you should not include for the purpose of tax. So what are the important points here? Objective of composition scheme is to help the small scale taxpayers so that they don't have the burden of compliance, and make sure that they do the compliance in a very easy manner. Complications of classification is eliminated here. This rate, this good you have to pay 18%, this you have to pay 5%, that you have to pay 12%, nothing is there. Quarterly payments, calculate the tax at 1%, 2%, 5% or 6% and pay once in quarter the respective tax. Then In case interstate supplies or supplies through electronic commerce operator are there, you cannot go for the composition scheme. Turnover limit is 1.5 crores here for manufacturers and traders and restaurant service providers. Other service providers, it is 50 lakhs. So these are the rates which are there. Please have a snapshot of this. Again, the manufacturers of certain goods are restricted by the government, like ice cream, pan masala, tobacco, etc. Manufacturers other than manufacturers of such goods, the rate is 2%. Restaurant service, it is 5%. Traders or any other supply eligible is 1%. Other service providers 10 to A is 6%, which is applicable. So I hope this is clear. Now, what are the further rules? These just are rules. You just go through it. Not very important. Just for understanding purpose, how to do it. When whoever is not registered, we have to apply for the registration. There an option will be there for selecting the composition levy. You have to select that and apply the form. Once you do that, it is treated as an intimation to pay the tax under the composition levy. Okay, intimation considered only after the grant of registration. Whoever opts to pay under the composition scheme shall file the intimation prior to the commencement of year. That means whenever every year you have to inform the GST department that you are going to file under the composition levy. So you have to file this CMP1 that you have clearly opted to file under the composition scheme. Fine. So again, as I told you, the eligible person here shall, instead of paying the tax on every invoice, prescribed percentage of the turnover he has to pay. At the end of the quarter, he has to pay the tax without availing the input tax credit. Annual return has to be filed with the composition dealer. Registration is compulsory under GST. Turnover limit 1.5 crores for goods, manufacturers, traders, and restaurant service providers. In case of the government has exercised the power to increase it to 1.5 crores and has done the same. For 8 of the special category states, you don't have to remember these states and all. Very rare, only in a very rare situation you can expect wherein the state Arunachal Pradesh is mentioned and a question is asked, but I don't foresee it. But if you are able to remember, you remember, because it's a scoring subject. Let's not miss out on marks because of not remembering the states. So I've given the respective states where the turnover is there. Accordingly, you have to mention. 10 subsection 2A is a new section which has been added, which talks about the turnover limit for services, which is 50 lakhs. Again, the moment it crosses 50 lakhs, option will lapse. What has to be included in the aggregate turnover? Taxable supplies, exempt supplies, export of goods or services or both, interstate supplies. Exclusions, inward supplies on which reverse charge mechanism is paid has to be excluded. Turnover should also include the amount between April 1st till the date on which he becomes liable for register. That also you have to include the turnover. Some examples here. A photographer, Mr. James Bond, has commenced providing photography services in Delhi from April during FY 2021-22. His turnover for various quarters till December is as follows. April to June 20 lakhs, July to September 30 lakhs, October to December 20 lakhs. Easy eligible for composition scheme. Easy eligible for composition scheme. If your answer is yes, what is the tax which has to be paid by him? So any answers here? So therefore, here what is happening? April to June, it is 20 lakhs. So that is here the preceding year turnover is not been given. So therefore, it is assumed that this is the first turnover for him. So till 20 lakhs, he is not liable to register on it. So this turnover to be excluded. This turnover to be excluded since he is not liable to be registered. Then July to September is 30 lakhs. So here what is happening? July to September, he is definitely eligible for composition scheme. So composition scheme will come here. Here it is 6% because it is services. So therefore total GST is 1,80,000. October to December is rupees 20 lakhs. Now here what is happening? This 50 lakhs limit is exhausted. So 20 lakhs, nothing, 30 lakhs you can, but for the turnover calculation, you have to take this April to June also. So this is exhausted. So therefore, October to December, he has to pay under regular scheme. So assuming tax rate is 18%, it comes to 3,60,000. I hope it is clear. This is how the composition scheme you have to pay the respective tax. I hope it is clear. Okay. Different. See, he is not eligible, correct, but only from here he is not eligible. But he just asked whether he is eligible. He is eligible till September. But from September, the option will lapse because it has crossed the respective one. I hope that is clear. Then, so further points here in 10 subsection 2, persons who are not eligible for composition scheme, who are supplier of goods not leviable to tax, interstate outward supply outside the state you are selling. You are supplying the goods through e-commerce operator, manufacturer of ice cream, pan masala, tobacco. Supplier who is either a casual taxable, non-resident taxable person. Same way for services also is covered. It is pretty much the same. Not leviable to tax, interstate outward supply of goods or services, e-commerce operator who is either a casual taxable person or a non-resident taxable person. Marginal supply of services, I hope you got this point. Other than services, who is eligible for composition levy, specified value can be covered. You have to look at the preceding year's turnover if it is given. 10% of the turnover in the preceding financial year or 5%, whichever is higher, has to be taken into consideration. Example, Mr. Warner is engaged in the supply of goods. His turnover in the preceding financial year is 60 lakhs. He wants to start providing some technical consultancy. He asks your opinion whether you can do so. Please provide the same. So what is the answer for this? Can anyone answer? What is the, can he provide first of all? If he can provide, what is the limit to be taken into consideration? If option lapsed, regular GST to be paid on balance amount only, not the above entire year term, balance amount only. I hope that is clear. This one, what is the limit? 60 lakhs preceding financial year. So 10% of that or 5 lakhs, whichever is higher. So 10% of 60 lakhs is 6 lakhs or 5 lakhs, whichever is higher. Therefore, rupees 6 lakhs services can be provided. I hope this is clear. Then these are for the rules for registration. Again, rules are not very relevant. Just go through it, rule 3 and rule 4. I mean, it is relevant for practical implementation of composition scheme, etc., but not for the examination purpose. So don't worry much about that. Then, any person who is not registered and applies for registration may give an option to pay under the composition levy here in part B, the GST REG 1. The same shall be considered as an intimation to pay the tax under composition levy, and option shall be effected from the date when the registration is effective. Electronically, he has to file an intimation in a prescribed form, that is that CMP1, as I told you. He should also furnish the statement in the prescribed form in accordance with provisions of 44. Person opted for the composition levy has to comply with the following conditions. He should not be a casual taxable person, as I told you, or non-resident, and he has to pay the tax under the reverse charge mechanism. What are the conditions here? He should not be engaged in manufacture of restricted goods. We will see what the restricted goods are. As I told you, ice creams, tobacco, pan masala, etc. He shall mention the words composition taxable person, not eligible to collect the supplies on top of the bill of supply. compositions levy person has to issue a bill of supply. In accounts and records chapter, we will see that he will not issue a tax invoice, he will issue a bill of supply. On every notice or signboard, composition taxable person should be clearly indicated. 10 subsection 3, read with rule number 6. This rule shall be as valid as long as it exceeds the specified limit. The option will lapse once turnover increases. Once conditions are not satisfied, regular provisions will apply. Within 7 days from the event of lapsing, he has to file an intimation in the prescribed form. Then validity, if proper officer has a reason to believe that he is not actually eligible for composition scheme, but he has opted for that, he will issue the notice. Then the person will reply to the show cause notice and the order to that extent will be passed. Same person is there, more than one registration uniformly. You cannot say that one state registration you will go for composition scheme, other you will go for the regular scheme. He cannot collect the tax, you cannot claim the input tax credit, and sometimes penalty also can be imposed in case you are not availing. So I hope you have got this clear. So with the technologies, we have already seen the question, and yeah, let us look at further example. Further questions here. Before that, any queries here before we go to the questions? Marginal supply of service means if you're primarily engaged in supply of goods, but you also want to do some supply of services. That is your marginal supply of service. So since your primary supply is only goods, the supply is only marginal to it. What to do in that case? That is why the word marginal supply of service is mentioned. Some questions here. Technology enterprises registered in Jalandhar, Punjab is engaged in manufacturing computer systems. Its aggregate turnover in the preceding financial year is 125 lakhs. Technology enterprises supplies the computer system manufactured by it within the state of Punjab with a view to expand its operations. Okay, with a view to expand its operations, it will also start providing repairing services of computer systems in the current financial year. Repairing services also it will start providing. Can it go for the composition scheme? If you feel if so it can go, what is the limit up to which it can provide the services? Please mention that also. Yes, any answers for this? So here if you see 125 lakhs is the turnover limit is 1.5 crores. He can definitely opt for composition scheme, but services should be restricted to 10% of the turnover in preceding financial year. So therefore, rupees 12.5 lakhs. So up to rupees 12.5 lakhs, he can provide the services. Fine. I hope this is clear. Then, Messrs. Siddharth and Sons, registered in Delhi, owns a restaurant Tasty Foods with a turnover of 112 lakhs in the preceding financial year. It will also start intrastate trading of juices. Intrastate trading of juices, it will start here. It owns a restaurant and it wants to start intrastate trading. What happens here? It owns a restaurant, but it wants intrastate trading. So here, if you see, apart from restaurants, apart from restaurants. He wants to do trading of juices. So nowhere there is a restriction that he cannot opt for restaurant services and trading both. So definitely nowhere in the provision it gives such a restriction. So therefore, since there is no restriction, he can opt for both 10(1) and 10(2) of the CGST Act 2007. Fine. I hope this question also is clear. Next one. Sitaram Associates, registered in Sikkim, is engaged in running a food chain veg kitchen. It has a turnover of 73 lakhs in preceding current financial year. It decides to shut down the food chain owing to huge losses. Instead, it will start providing intrastate architect services. Any question here? So here if you see, he is engaged in Sikkim, turnover of 73 lakhs is there in the preceding financial year. So here if you see in Sikkim, okay, in Sikkim limit is 75 lakhs. Okay, so definitely it is less than the limit, there is no problem. But he is telling it will start providing intrastate architect services. The moment architect services come, 10(2)A limit will apply. So 10(2)A limit is actually here amount of the limit of 10(2)A is 50 lakhs. So if the turnover is more than 50 lakhs, you cannot opt for 10 subsection 2A. I hope it is clear. So therefore here Sitaram cannot provide architect services under section 10 subsection 2A because turnover is more than the limit of rupees 50 lakhs. Okay, I'm just giving you hint answers. Don't write such small answers in the examination. You can go through the study material. I told you in previous session also how to approach the answer. You don't have to write elaborate answer as it is given in the study material. Be brief, but stick to the provision, give reference to the provision and answer the question. Fine. Next one. Deepti Services, registered in Uttarakhand, is exclusively providing hairstyling services. Turnover of rupees 34 lakhs in the preceding financial year. Will your answer be different if it starts supplying beauty products also along with providing hairstyling services? What is the answer for this? Can anyone tell me? Any answers? So here if you see Deepti Services registered in Uttarakhand, exclusively hairstyling services, it has turnover of 34 lakhs. Definitely it cannot for the composition scheme because it is less than 50 lakhs. Will your answer be different if it also starts providing beauty products along with providing hairstyling services? Answer will remain the same. It can go for the composition scheme also. If it products the hairstyling services also, main thing is you have to fulfill the conditions under 2A. And If you are supplying the products, it doesn't mean that the limit will increase to 1.5 crores because the principal supplies hairstyling services. The limit will continue to be 50 lakhs. Slightly elaborate problem. Just go through this, take screenshots of this question so that you can try to answer this question. B&D Company, a partnership firm in Nagpur, Maharashtra, is a wholesaler of taxable product P and product Q exempt by way of notification. The firm supplies these products only in eastern part of Maharashtra. All procurements, both goods and services of the firm, are from the suppliers registered in the regular scheme in the state of Maharashtra. The firm pays the tax under the composition scheme. B&D Company has furnished the following details with respect to its turnover exclusive of taxes and stock exclusive of taxes. So particulars, P is 60 lakhs. Here if you see, P is the taxable product, Q is the exempt product. Please remember that. 60 lakhs is P and 60 lakhs for 30th June. 30th September it is 50 lakhs. For Q, 30th June is 17 lakh 65,000 and 30th September for Q is 17 lakhs. These are the details which are given. Please go through this. Now he is given an extract of the bill book maintained by the following. It showed all of these bills. So basically this is still 30th September. This is the bill book which is given, both the value of the taxes. Why he has given this is you have to find out where the composition scheme is lapsed. So please take a screenshot of this, or alternatively you can also refer to your study material. This problem will be there. Let me tell you the page number. I've written that somewhere. It's problem number 6 of 3.78. 3.78 is the page number. Problem number 6. Problem number 6. Okay. So there you can just see, or you can take a screenshot from here also if you don't have the respective question. Yeah. So this is the bill book which is given of P and Q. Further, B&D Company paid a freight of rupees 1,40,000 to Goods Transport Agency during the period April to October. Assume equal amount of freight is paid each month on the 10th of each month. Also assume that the goods for which the freight is paid on 10th are transported between 11th to 20th of the month. All the amounts are exclusive of taxes. Compute the GST liability for B&D Company under composition scheme under 1 and 2 of section 10, showing the calculations for each quarter separately. Make suitable assumptions wherever required. Rate of CGST is 2.5% each for GST. Please try to work out this problem. Slightly complicated and tricky, but please try. There is nothing wrong. The first time what you do. So first here, what you have to do is you have to calculate the aggregate turnover when it is increasing or where it is increasing beyond 1.5 crores. That is what you have to do. And for the purpose of calculating the aggregate turnover, both the taxable and the exempt product have to be taken into consideration. So here if you see 60 lakhs is P, 50 lakhs till September, 1765 plus 17 lakhs. So all these four you have to take for the purpose of calculation. So 60 lakhs plus 50 lakhs, 1 crore 10 lakhs. 1 crore 10 lakhs plus 17 lakh 65,000 is 1 crore 27 lakh 65,000 plus 17 lakhs. This total comes to 1 crore 44 lakh 65,000. This is the total of all four. Total of all four. So that means till 30th September, it was less than 1.5 crores. Now go here. Here what is happening? 2 lakhs 3,000, total is 2 lakh 3,000, 1 lakh 38,250, 1 lakh 6,250, 92,500. Okay, so if you add these four, 2,03,000 plus 138,250 plus 106,250 plus 92,500. If you add these to 1 crore 44 lakh 65,000, you will get 1 crore 50 lakh 5,000. Okay, you will get 1 crore. So here it will become 1 crore 50 lakh 5,000. So that is what, so that means the turnover is exceeded on 3rd October. On 3rd October, the turnover is exceeded. So therefore, from 3rd October, it has to pay the tax under the regular scheme. So therefore, here what will happen? You will have the output tax liability as per the composition scheme. What is asked in the question? The question says, compute the GST liability for the period April to October. That means he is asking only under the composition scheme. You don't have to calculate under the regular scheme. So composition scheme is there till the 3rd of October. So therefore, in the 3rd of October, you have to calculate under the composition scheme. So therefore, the total of the turnover, please work out. So here, if you see, turnover 1% is the rate of tax for quarter 60 lakhs, 50 lakhs to quarter 30th. Here it is 4 lakh 3,000. Because only the taxable you have to take. Don't get confused and take the exempt also. 60 lakhs you have to take. You have to take 50 lakhs. And here you have to take only P. Only P, which comes to 4 lakh 3,000. 4 lakh 3,000 you have to take here to that quarter ended 31/2 of B of taxable turnover of P is 4 lakh 3,000. So here you will have to work out the tax to that extent. Okay. How did 4 lakh 3,000 come? It is 2 lakhs plus 1 lakh 36,000 plus 67,000. That is how you got 4 lakh 3,000. So therefore, on this 1% CGST 0.5, SGST 0.5, you will get this particular amount. Then you come to the inward supply. Inward supply is, if you see here, just because you opt for the composition scheme, there is no exemption from the inward supply. So inward supply is 5%. Inward supply of RCM. This on a monthly basis it is taken. So 1,40,000 he is paid from April to October. April to October he has paid 1,40,000. So if you see here, 60,000 and 60,000. Total of 1,20,000 will come under the composition scheme period. For the composition scheme period, you will have to take 1,20,000. How do you get 1,20,000? Because he said from April to October, it is 1,40,000. And the payment goods for which is made are traveled between 11th to 20th. So therefore here RCM needs to be taken only from April to September, because this October 1 is coming only after 10th. So therefore you have to take this later. This will not come now. So therefore 1,20,000 into 5%. Into 5% CGST, SGST, add the inward supply RCM, and this is the total of the GST under the composition scheme. I hope it is clear. Slightly lengthy problem, but covering all the concepts in detail. Please go through it. It is pretty simple. Then next one, Subbalakshmi Goods is engaged in supplying restaurant service in Maharashtra in the preceding financial year. It has a turnover of 140 lakhs from the restaurant service. Further, it has earned bank interest of 20 lakhs from the fixed deposit. You are required to advise the Subbalakshmi Foods whether it is eligible for composition scheme under 1 and 2 of section 10. Further, assuming that in current financial year, its turnover is 130 lakhs from supply of restaurant service and 10 lakhs from supply of farm labor, it is also earned bank interest. Compute the tax payable in the current financial year. Please try to answer this. Again, a question based on what is the turnover in the preceding financial year and what it is now. Yeah. So here, if you see the preceding financial year, it had a turnover of 140 lakhs from restaurant service, but further it had earned bank interest of 20 lakhs from the fixed deposits. It is very clearly mentioned that interest from the fixed deposits should not be included in the threshold limit. So therefore, the turnover for our calculation purpose is 1 crore 40 lakhs only. The moment it is 1 crore 40 lakhs, straight away it is eligible for the composition scheme in the current financial year. So therefore, once the current financial year turnover is 130 lakhs from the supply of restaurant services and 10 lakhs from the supply of farm labor. Okay, so 130 lakhs for restaurant services, 10 lakhs from the supply of farm labor. So here this is the marginal services which is being rendered. So therefore, if you see the total calculation, it comes to 130 plus 10 lakhs, 1 crore 40 lakhs of 5% is the rate, because it is restaurant service, 5% is the rate. So therefore, current financial year, rupees 130 lakhs plus rupees 10 lakhs. Supply of manpower can be taken because up to 10% of preceding turnover. Preceding turnover is 140. So up to 14 lakhs you can provide. So therefore 10 lakhs is very much eligible. So therefore 130 plus 140, current financial year it is 140 lakhs. 140 lakhs you can provide. For this, tax is 5% because it is restaurant service. Tax percent rupees 140 is 7 lakhs. I hope this is clear to all of you. Then Bansal and Chandok started a partnership firm of chartered accountants in Jaipur, Rajasthan on 1st April. The firm specializes in providing the audit services to banks. It has provided the details of the turnover. April 10 lakhs, July, September 10 lakhs. 1 second, I think this problem is incomplete. So let me just check once. Yeah, it's very much the same. Only thing is there's a small thing which has been omitted here. Audit services, April to June is 10 lakhs, July to September is 20 lakhs. It crossed the threshold of 20 lakhs on 1st August. They want to pay under the concessional rate. Threshold limit of August, it crossed 20. Threshold limit, it's a pretty simple problem. You can try to work out. It is problem number 8 in your study material. Then Harishchandra of New Delhi makes a request for a motor cab to super ride for traveling from New Delhi to Gurgaon, Haryana. After Harishchandra pays the cab charges using his debit card, he gets the details of his driver, Zorawar Singh, and cab's registration number. Super Ride is a mobile application owned and managed by Peri India Limited, located in India. The application Super Ride facilitates a potential customer to connect with the persons providing the cab service. He claims the cab service is provided by Zorawar Singh and hence he is liable to pay the GST with reference to the provisions of IGST Act. So here you have to make sure that the provision what you mentioned is 7 subsection 5, not 9 subsection 5. Okay, because in IGST the same provision is 7 subsection 5. Determine who is the person liable to pay the tax. So here you have to be very clear that you have to take into account the provisions of 9 subsection 5 and the respective notification which is given along with that. You have to make sure that you answer the question based on this. So how do you answer this question? Refer 9 subsection 5, concept of e-commerce operator. Okay, notified services includes radio cabs and motor vehicles. Therefore, person liable to pay the tax is Super Ride and not Zorawar Singh. Okay, Peri India. Sorry, Peri India is owned by the app. So therefore, person liable to pay the tax is Peri India Limited and not Zorawar Singh. Okay. Therefore, This is the oversee. I hope this is clear. So a reference to 9 subsection 5 and the respective provisions will help you understand this particular problem. Next one. MN Limited has 2 registered places of business in the state of Haryana. Its aggregate turnover during the preceding financial year was 62 lakhs. It wishes to opt for composition scheme under 10.1 and 10.2 for one of the place in the current year. Wants to continue the regular scheme and pay taxes at the normal rate. Can MN do it? Explain with reason. So here you have to make sure that you refer to the respective provision and answer the particular question. There is a proviso to 10 subsection 2. That is the reference what you have to give. As per the proviso, you have to, it's very, very clear that you have to make sure that you pay the tax. If you are opting for the composition scheme, it has to be the same scheme in both the particular states. So therefore, MN Limited cannot do this opting for the composition scheme in one and the regular scheme in the other one. He has to opt for both the registrations. He has to go for the composition scheme. Only that is allowed. Other than that, the balance is not. I hope this is clear. Then next one. Ranveer Industries, registered in Himachal Pradesh, is engaged in making interstate supplies of ready-made garments. Aggregate turnover is 70 lakhs. Opted for composition scheme 10.1.2, paid tax for April to June under the composition levy. The officer has levied penalty for wrongly availing the scheme on Ranveer Enterprises in addition to the tax payable. Examine the validity of the action. Please try to answer this question. Tricky question where one it is there is one it is there in that. Yeah, 5 subsection 5. You're correct, Sriram. It is not 7 subsection 5 or 5 subsection. Yeah. Anyone answering this question? Ranveer Industries? So here, if you see, he has made this interstate supplies. The moment interstate supply is there, he is violating the condition given under the composition scheme. He cannot make the interstate supplies. So therefore, whatever action which is proposed to be taken by the respective officer is very much correct as per the law, because he is violating the condition of the composition scheme. He has opted for the composition scheme and taken, even though he is done in interstate supplies. So therefore, the action which is undertaken by the respective officer is very much correct, and there is nothing wrong in what is the condition, what is the action taken by the respective officer. Fine. So therefore, now with that, we come to the end of this particular chapter. We worked out some problems based on this. Now, let us quickly go to the supplementary study paper and cover the amendments. Some of them I've covered here, but some extra clarifications are given. You can just go through it and try to understand the various modalities. So let us go quickly to the supplementary study paper here. Charge of GST chapter 3. One amendment which has happened is there are 4 products which are there here. So in these particular products, you have the ice cream, pan masala, tobacco, aerated water. This was covered. So the manufacturers of the following goods, don't get confused. He says manufacturers. So that means a trader who is selling the soft drinks and all, they can go. Manufacturers cannot go for this particular composition scheme. Fine. So some amendments have happened. Some more products were added. What all products are added? Fly ash bricks, bricks of fossil meals, building bricks, earthen or roofing tiles. Okay, these are all added to it. Again, all manufacturers only cannot go for this one. Then these amendments in reverse charge we have covered, where 6% this particular line was deleted. We have covered this already in our entire discussion. And then we also, yeah, all this we have covered. And here this there's particular type of posts only which were excluded, but now everything, all services by Department of Posts are excluded from the entry. And 5AA also we have covered. Again here in 9 subsection 5, the respective amendment, you have to add these two particular points to that. That is your omnibus and other motor vehicle needs to be added. Okay. Now, and as I told you, this amendment is very important. Some issues have been clarified. Please kindly go through it. Earlier, under 9 subsection 5, the e-commerce operator was doing the TCS in case of restaurant services, but the TCS is no longer applicable because the entire GST is being paid by the e-commerce operator. And e-commerce operator need not take separate registration for paying this tax. It can pay it under the regular registration what they have. So therefore, any restaurant service which is being provided through the e-commerce operator, they have to make sure that they take the registration and pay the respective GST, and supply of restaurant services to be included in aggregate turnover of person supplying the restaurant services through electronic commerce operator. Fine. So therefore, when you're calculating the aggregate turnover of the e-commerce operator, you have to include this restaurant related GST also. These are just some issues which have been clarified. Please go through them. Okay. Also, restaurant services what are provided through the electronic commerce operator, they are not to be considered as inward supply, liable to RCM. It has to be increased in the electronic commerce operator. Then reversal of proportionate input tax credit not required. See, when restaurant is providing the service, there is no input tax credit. But here, once the e-commerce operator is declaring that paying the tax, no need of any reversal of input tax credit because the e-commerce operator is not incurring any expenses attributable to the restaurant GST. It is expenses are something different. They are just, instead of restaurant paying, they are paying. So no question of any reversal of proportionate input tax credit. Fine. Then GST has to be paid by the supplier on services not notified under 9.5 but supplied through electronic commerce operator. There are various other services also, but we are not notified under 9 subsection 5. It is not that plumbing, carpenting. It is not our travel accommodation or the cab one. Apart from this, if any service is there, directly only the GST has to be paid. Fine. Then billing in case of restaurant service and goods or services other than restaurant service sold by restaurant to the customer under the same order. Sometimes restaurant service and goods and services are both sold by the restaurant. The example is Swiggy. Swiggy sells restaurant related food, and also in Instamart, you also sell the basic packaged food like chips, etc. So in that particular situation, what is to be done? The advice is given that you have to make sure both are segregated separately. Separate bill for restaurant service, separate bill for the other service. Because other supplies, the restaurant or that particular person has to pay the tax. Only on restaurant services, Swiggy has to pay the tax. Then further clarification is given with regard to renting of motor vehicles designed to carry the passengers, and sometimes there are two services which are there. First one is renting of motor vehicle designed to carry the passengers, and second one is passenger transport services which cover predetermined routes. So either you take the motor vehicle yourself and pay the rent on that, or you go for a predetermined transport sort of thing where everything is covered in that. So where body corporate hires the motor vehicle for a period of time, where the vehicle is with the body corporate itself, then it comes under the renting of motor vehicle. But transport service means they shall not be liable to pay the tax under RCM. Forward charge will be applicable. So this thin line of difference between passenger transport service and your renting of motor vehicle has been covered here. This is an important point which you have to remember. Fine. So with this, we come to the end of the issues in the supplementary study paper also. Now, further issues here. Yeah, let me see. Section 10 composition levy under the section is used in both explanation 1 and 2 explanation. But you said something else for explanation 2. Explanation, please explain explanation 2. Let us go to the explanation. No problem. 1 minute. See, this is explanation 1. This is explanation 2. Explanation 1 is for calculating aggregate turnover. The value of the supplies made from April 1st up to the date when he becomes liable to tax. Okay, this shall be included for the purpose of calculating turnover. For the purpose of calculating the aggregate turnover, explanation 1 says from April 1st it will be eligible. Second explanation 2 will say that for the purpose of determining the tax, two things. First one, aggregate turnover is one. Second is determining the tax one. For first one, for determining the aggregate turnover, you shall not include the exempt supplies and you shall include the value from 1st April till he becomes liable for registration. That for turnover you should include. But for the purpose of tax, you will not include the value of the supplies from 1st April financial year. We saw that in the example also. Okay, explanation 2 talks about for calculating the tax, you will not take into account the turnover from April 1st till he becomes the liable for registration. Explanation 1 says for the calculation of aggregate turnover from April 1st till he becomes liable for registration, you have to include it, right? I hope this is clear. Yes, Sunday evening the class is there, Sriram. So therefore now we come to the end of this particular topic. We covered as much as possible and according to with relevant problems as well. So kindly revise as always. I say please revise whatever we have read and let me know if you have any queries in the next class also you can ask. So Sunday evening, because I specifically requested them for a class on exemptions because charge of GST, if you see, it covered an entire class. There is no way we can cover exemptions and charge of GST both. So therefore, I have requested them for another class. In fact, for the previous batch, they had given the extra class. I don't know for this time why they tried to put it in one, but I have told that and they also agreed. So therefore, one extra class of exemptions is fitted on Sunday. I'm going to spoil your Sunday evening, unfortunately. So Sunday evening, 6 p.m. Let us all meet for the class on exemptions. Very, very important from examination point of view. Thank you very much. See you. Good night, everyone. I'll see you on Sunday at 6 p.m.